Right, good morning, everyone. It's 10 o'clock, so we'll make a start. I'm Councillor Film. Can I welcome you to the Scrutiny Committee today? Just a couple of housekeeping notes for those in the room to start with. I've not been told and fired with alarms. They are real. Through the gated doors. If I could ask anyone in the room if mobiles can ensure they're turned to silent, or those of you joining us online. A bit closer. Right, hopefully the sound is a little bit clearer. So for those joining us online, make sure your camera and microphone are turned till. Before we proceed, I was going to check if everyone can hear us okay. Could we just have some feedback as to whether the sound is now better than it was?
It's still intermittent, Bob.
Okay, thank you very much. Can we have a check on the IT front? Just going to see if we can sort that out for you. Try and make the sound a little bit clearer. Right, we've tried tweaking it at this end. Could we just again ask if the sound is audible online?
Yes, it's a little bit better, Bob, to be fair.
Thank you. I'll soldier on.
But it's still not very good, Bob. I'm getting old, but I don't think it is at all.
No, everybody who's online, everybody
who's
online is fine. It's the room that's not. So it's the only person we can't hear is you, Bob.
Okay. Can I just try someone else to try their mic and just see whether it's my... Right, we're just trying a different microphone. Is that any better? That's just to see whether it was the chair's mic.
Better.
Better.
Okay, we'll try with that one.
Or for worse.
Thank you very much. Okay, so if we move on, the next thing I was going to raise was just to remind people that the agenda pack with the papers is available via ModGov or directly from the council website from the link which was sent out to members. When I invite anyone to speak, could you clearly state who you are for the benefit of anyone who is listening to the meeting so they can identify who is speaking? And can I also welcome any members of the public or members of the media who are joining us today online. The meeting itself is being audio recorded, so that will be available later. And finally, if I can just remind you that as agendas are now viewed electronically, can I ask when members or officers are addressing an item, if they could refer to the page numbers from the agenda pack to assist all those present in finding the appropriate information, please. If we move then on to item 1 of our agenda, which is apologies for absence, and Ms Jackson, do you have apologies, please?
Thank you, Chair. We received apologies from Councillor Seeb, for whom Councillor Johnson is substituting, and received apologies from Councillor Cottle, although I think he may be online, for whom Councillor Stanton is substituting.
Thank you very much. The next item on the agenda.
Well done.
If I could just ask members who are on.
It's on flat packed.
If we could just ask those who are online to please make sure their microphones are off, because we are getting some conversations coming through from you, please. I think it might be Councillor White. Yes. Okay, thank you. So next item on the agenda is the minutes of the previous meeting, which have been previously circulated. Are there any amendments to those minutes from anyone who was present? Councillor Trimnell?
You say present. I only wanted to point out that my apologies aren't recorded, and that I also had Andy Dingwall, Councillor Andy Dingwall, substituting for me on that day. And additionally, I was online, and that's not recorded either.
Okay, certainly we can update that. Any other amendments? If not, could I ask for a proposal that they're a true and accurate record, please? Thank you, Councillor Lovell. Seconded, Councillor Ham. All those in favour that I sign those as such, please show. Any against, please show. That's clearly carried, so we'll do that later, if that's all right. Next item is declarations of interest, just to invite members to declare any interests that aren't already recorded in our normal declarations. Councillor Wilkins.
For agenda item number 8, I'd like to declare that I am sitting as chair of the LCN for levels and moors.
Okay, Councillor Ham. Councillor Rodriguez.
And also for Taunton.
Councillor Rodriguez.
Also for Bridgewater.
Okay, got those noted. Any other current chairs of LCNs? Okay, that's fine. So if we move then on to the next item, which is public question time, and as far as I'm aware, we have not had any questions submitted in advance, which brings us on to the next item on our agenda, which is the work programme. Members, you'll have seen that has been circulated. I just wanted to take this opportunity. We did ask members of the committee to send in their details if they were interested in sitting on two of the working groups that we're looking to set up, one looking at commercial assets and another one looking at disposal of assets. We have had a number of members come forward. We are still a little short. We were looking to have two groups, ideally of 4. We've currently had 5 volunteers come forward. Are there any other volunteers in the room that would like to sit on one of those? Councillor Trimnell, come to you first.
Apologies, I thought the email said if we weren't able to make it to this meeting, could we let know on the email? So I'm happy to sit on either, wherever I'm most valuable, I suppose.
Okay. Councillor Lovell.
Chair, happy to sit on either
Okay.
group.
Councillor Johnson, you indicated.
Yeah, I don't sit on the committee as an official member, but I've attended the last 2, and if you are short, I'd be happy to help out.
If we can, we'll keep you as keep you as a reserve, if that's all right at the moment. Are there any other members who wanted to put their names forward at this stage? And I'm not seeing anyone joining us online either who's a member. So that, I think that gets us to the number that we can sort that out, and we will take you up on your offer, Councillor Johnson. So that's good. Thank you very much. Again, just moving members on to the actual work programme. Jamie, do you want to comment on the list of items on the work programme at all?
Only to say, Chair, that there are a couple of items that are still to be confirmed, listed on the work programme, but there is scope for adding an item or 2. The committee have a meeting in September and November currently scheduled, so any other items there's probably scope for adding in. So open to suggestions. Thank you.
Thank you very much. Councillor Rodriguez.
Just a question, really. So as we're considering budget monitoring report this month, when will be the next time where we'll consider the next quarter? Will it be November meeting?
Mr. Vaughan, do you want to?
Yeah, I mean, we come to the budget monitoring report. We're proposing that we do monthly budget monitoring, so you will have them at every single one of your committees.
Thank you. Again, if there are no further suggestions at this point, what I would ask again is for members, if you have items that you think should come forward, please do notify myself and the Vice Chair, and we'll make sure that we can try and bring those forward to future agendas. We're keen to obviously cover as much as we can. And we did at the last meeting, you remember, come up with a very long list of items that we're going to aim to cover over the ensuing meetings. But we want to try and keep the agendas to a reasonable size each time, so we can actually get into some detail rather than just skirt over things each time. So please do feed those items back, and in the meantime we will continue to put items on that come off that list that we looked at the last meeting. If there are no further comments on agenda item 5, that brings us up to agenda item 6, which is our commercial investment report. And I think that Orit, you were going to introduce this one for us, please.
Thank you, Chair. My name is Robert Orit, and I'm the Commercial Property Land and Development Manager. We've put together these slides for scrutiny to provide commercial assets, the key risks, and how we manage them. For this initial presentation, we've avoided discussion of individual aspects, although we include a specific section on the battery assets at the end in view of the scale of the commitment to that sector. There are 3 of us here to present. Our temporary team structure means that I have the lead role to coordinate work on commercial investment assets within the strategic
if I just
asset service.
pause 1 minute, can you make sure you talk directly to the mic? We're getting some comments that when you're looking away, it's cutting in and out a bit, so it is the mics are a little flaky.
Thank you, Chair.
Further away from that speaker in the ceiling, it'll be even closer to you and further away from that.
Okay, I'll keep trying. We work within the Strategic Asset Service. Joining me to present are Brendan Fisher, who has a complete focus on the investment area, and Harvey Gardner is our other key specialist. Our agenda today ranges through an initial introduction to the overall investment model and capital, followed by an overview analysis of the investment property portfolio. We then focus our presentation into the main asset risk areas for the investment property. Finally, there's a brief introduction to the battery energy storage assets before we pause for questions and discussion. Next slide, please. So this slide illustrates the overall model for the investment portfolio. The example is the model put together at South Somerset District Council at the time of their approval of the second tranche of capital funding. You can see how the gross yield needs to meet various cost elements before the target to leave a net revenue contribution. The total scale of the original investment in property assets across all the districts was around £290 million. The gross return should therefore see an annual income of around £20.3 million. The current passing rent for the investment property is about 19.3 million, with a current void relating to 7 units which we're working to relet. The battery schemes paid initial dividends to the council last year, even though the first of the 3 schemes applies all surpluses to loan repayment until the borrowing is fully repaid. Next slide, please. This table is taken from a finance report indicating a forecast year end as at March 2023 with the overall borrowing position for all the commercial assets. The property team are not the individuals to comment on capital financing, but it serves to illustrate that the investment is mainly linked to borrowings at this stage. Next slide, please.
Good morning all. This is a brief overview of the investment property assets that we currently hold. You'll see that we've invested about £290 million with assets ranging from 1.2 million to 22.2 million pounds. As Robert's mentioned, we've got about 19.3 million pounds on the current rent roll, which gives us a gross average yield of about 6.62. So that's the running yield. A couple of terms on there that you may or may not be aware of. The WALT is the weighted average unexpired lease term, which shows us how long on average until the leases expire on the portfolio. That's currently 6.27 years. And the ERV is the estimated rental value. So we currently have 91 tenants and 7 voids. Next slide, please. When we look at the investment performance, we are looking at the security of the income, the tenant covenant, the unexpired lease term or the tenant break, any inertia, so that is how long we can expect the tenant to be in situ, and the rental performance and the relationship to the estimated rental value. We move on to the next slide, please. We move on to the next slide, please. We've got a bit of a discrepancy in the deck that we had produced and the slides that have been presented on screen. Can we move to the next slide?
I think it's the ones that we've got in our documents that were circulated beforehand are not correlating to what's coming up on the screen either. So I think we may have in our papers the ones that you, at which point we think the one we were about to be looking at was value by sector, which was coming up on certainly my screen for my report. So
what do you suggest we do, Chair? I mean, we've kind of planned our presentation to link to the slides.
Yeah.
that you've all got, but the screen is different.
Okay. If members can just bear with us a minute, we're going to try and get you linked into the meeting so we can share the slides.
Are you able to send?
As I say, if you can just bear with us one moment while we're just getting the presentation sorted, please. Right, I think we've now got the screen up, so we're going to take it back if we can to the investment property asset summary page. If you want to take it from there, and then we'll. That is page 25. Yeah. So in your documents for those who are following online, it's page 25 of the agenda.
I'll
Okay,
assume
carry on,
you can edit this together seamlessly. Excellent. Can we have the next slide, please? So this slide shows the value by sector of the portfolio as it was valued at the end of the year in March 2022, with the separate councils reporting the values at that point. You'll see that at that stage, the value was about £265 million, which is around 5% down on the purchase price and broadly in line with the slight softening in the market generally. Now, in the past year, you would expect to see that value has declined again on that basis. But if we look at the values from March 2022, you'll see that there is a reasonably even split between the three main sectors, which are the retail sector, the office sector, and the industrial sector, with 12% covering all other investments, which we would term alternatives. Just a quick note on the retail sector, which makes up 31% of our portfolio. I think a lot of people will note that the high street has, over the past 5 or 10 years, taken what we technically call a bit of a kicking. It's important to note that only 25% of our assets in this sector are high street, with 75% being retail warehousing, which has fared rather better.
Next slide, please. Yeah, good morning. The geographic location of the assets is well spread. This is partially down to differing councils, district councils had different views in terms of their investment strategy. Sedgemoor and Mendip were very Somerset focused, whereas Somerset West and Taunton took a slightly alternative view. So we have assets ranging from office and retail premises in Hamilton and Ayr, running through to food preparation premises in the west of Cornwall. Next slide, please.
So we now move on to the main asset risk areas that we want to identify for you, starting with tenant failure. Next slide, please.
I think one of the key things that we'll identify with investment property is that there is a risk of tenant failure. Now, fortunately for us, we've had COVID-19, which has given us a great stress test from all of our tenants, and we probably wouldn't have chosen it, but actually, in reality, the portfolio performed very well with, across the portfolio, 96 to 98% of rents collected. So I think that really is a shot in the arm for us. Excuse the pun. There are currently 3 tenants in administration or proposing a CVA, including Fitness First, who appear on your screen there. Now, I think this is a knock-on from that. The other tenants are Wilco and Cox and Cox. However, this is 3% of all the lessees that we've got in our portfolio, and in the long term, we would expect to re-let those properties fairly easily. We move on to the next slide, please. When we purchased the assets, we took a worst case scenario and we assumed that the tenants would vacate. Now, this graph that you've got in front of you shows the running yield in a worst case scenario, and we've always valued on that basis. What we're doing as a department is trying to renegotiate leases, to extend them where possible. When there are rent reviews, we go for an uplift in the rent, and that is not factored into this reasonable worst case scenario. So although you'll see that the yield at the moment is around 6.5%, and in 27-28 drops to around 5.5%, actually the reality is likely to be far smoother than that, and over the long term we're expecting to see a more rounded curve than is currently on your screen, and going forward we would expect that to tick upwards from 2030 in particular. We move on to the next slide, please.
So I'm actually going to skip on from this slide as well, as we've already covered it. So another area of risk is changes in rental values, and this graph, which comes from a leading real estate index, shows the long-term movements in rental values. But it's important to note that the indicator here is the annual percentage change. So anything above 0 means rents are rising, and anything below 0, they're falling. And what you can see with the orange-yellow line is the retail sector, which has had a run of years where rental values have declined substantially, where all of the other sectors predominantly stay above the line. There's a wholesale dip in rental values linked to the short period of the initial COVID period, and when people were very, very negative for a time about how dramatic it was going to be. But a feature of commercial property leases is that they fix a contractual rent, and they provide for upwards only rent reviews. So for as long as the leases remain, effectively you smooth over short-term fluctuations. And in a few of our leases, there is indexation, which means that the rents keep moving forwards on a percentage rise. Next slide, please. Another area of risk is changes in capital value, and there are 2 graphs here, but only really to give the long-term flow. They show fluctuations in yield rates, and I think it's sometimes a challenge to relate to the fact that higher yield means lower value, and vice versa. So it's a reciprocal indicator. So if you see about 2/3 of the way across the left-hand graph, there's a sharp upward spike in yields, which was a very, very sharp decline in values in the 2007-08 global financial crisis. But despite the fact that values over about 18 months fell by 44%, they almost immediately recovered and came back to par. what we're seeing at the moment in the right-hand graph is that the yields moved up again from Easter last year with the inflation and base rate pressures. So there has been a fall in the market in the calendar year between 15 and 20% in values. We expect that it will follow so a relatively sharp recovery. But I think everybody is aware that we've had in at the minute we're a little bit of the recovery in market values. Next slide, please.
Building depreciation. So, like most physical assets, buildings tend to depreciate over time, although for buildings, this is a long-term trend. However, commercial property leases normally make the tenant fully responsible for repair of the building, and the majority of the leases in the portfolio are under FRI terms. So in essence, this means that at the end of the term, at the expiry, the tenant is responsible to bring the building back into full repair. Currently, is the office investment Imperial House in Newport. The asset was acquired for £4.6 million. It's a quality office building to the north of Newport, 26,000 feet, and the tenant was Go Compare. Go Compare had a change of heart in terms of their office space requirement and decided to end the lease. And fortunately, with some good marketing, a new tenant's been found. There's a capital sum of £500,000 to bring the building back into its proper state of condition, of which the tenant is responsible for £400,000 under the dilapidations, and the council will be picking up £100,000 capital investment for building improvements. So, you know, it's a very sensible way of securing long-term income and keeping the asset in tip-top condition. I'm pleased to report as a footnote that none of our investment properties are newly constructed, so initial depreciation has already happened by virtue of their age, and the quality level, age of buildings across the portfolio is diverse and our risk is spread. Next slide, please. Energy performance, as everyone's aware, the UK government is pushing UK net zero carbon. This in part has been set by the MEIS regulations, which means that commercial properties do need to improve their energy performance, and this is measured through the EPC energy performance certificates. In relation to this, the wider portfolio is at a good level, with only 8% of assets at grade E, and we have none at grade F. The government's targets are that all assets should meet C, a minimum EPC C by 2027 and B by 2030. So this will be a specific area of focus for the team as soon as the short-term needs for consolidated management of the investment portfolio have been met. An experience thus far and during ongoing negotiations is that it is possible to deliver improvements alongside negotiations with tenants when either negotiating re-gears or new terms on lease terms. Next slide, please.
Thanks. So the last risk I highlight is asset management delivery. You've heard we've talked about the mitigation for other risks, that these all underscore the importance of effective asset management. Maintaining the close and quite intense level of activity by experienced team members significantly improves the level of income receivable. Senior management recognises this and has supported interim team arrangements. Aspects of strategic asset work currently continue to be delivered within pre-vesting team structures. So we have colleagues who were the district council leads still closely involved with the properties that their councils acquired, which gives us continuity of knowledge. But a benefit of the unitary structure is that we're able to deploy more specialist roles. This has been particularly beneficial for the financial management, where we have a specialist concentration of activity. There has been a need to rebuild rent collection procedures, and this is proceeding well. Other current main priorities are listed on the slide. Next slide, please. So I'd like to finish with an introduction to the battery energy storage system assets that we have. We haven't talked about individual properties to a great extent, but I think for the battery assets, some detail is helpful. Despite these being physical investment assets, the way they perform is fundamentally different from property investments. We have three separate assets here, but they all operate into the same market area. There are long-term contracts in the form of the grid connection agreements with network operators, but there are no longer-term contractual arrangements. Quite a proportion of the income flow is generated through daily auctions, so it's a very, very different dynamic. The investment in each case involves securing the opportunity for a site with location, connection contract and planning consent to enable the construction of the battery energy storage system. This was delivered through the structure of loans to joint venture companies because the introducing company had control of the opportunities and sought to achieve an equity involvement for their substantial speculative exposure and subsequent development management. The systems have a finite lifespan, typically around 25 years. This is partly because the connection contracts are for a set period, also for the technical degradation of the equipment, and planning consents in each case are also for a defined set period. The total investment was around £42 million. You can see the breakdown between the schemes, but in fact on the grid there, the first three lines are different elements of the first scheme at Video outside Taunton, with the two later investments below. Next slide, please. So this image shows the two schemes in Fareham at Hampshire. At the time the photo was taken, Fareham 1 was completed and Fareham 2 was in the early stages of construction. So you can see the structure that is formed for the containers which contain the batteries to be positioned onto them. Although they're on adjoining sites, they are fully separate in their operation, a separate company and separate lease arrangements. The solar scheme that you can see adjacent has no involvement at all with our battery schemes and is separately owned. Next slide, please. I won't run through these, but they illustrate that there are separate component sources of income. Each of them has particular technical characteristics, and it's a very highly specialized market. The joint venture companies that we have shares in use the services of an aggregator, as using such a specialist is an essential requirement for an owner of an individual project to utilize the specialist interface with the markets managed by National Grid. That's the end of our presentation, so I hand back to you, Chair. Thank you.
Thank you very much. Are there any comments or questions from within the members of the committee to start with, please? Yes, Councillor Trimble will start with, and then Councillor Rodriguez.
Thank you, Chair. So on page 24, I think it is, I'll just go back to it. You've got the investment property assets summary, 25, sorry, and you have the gross rental income of 19.3 million. I wondered what the net income was, why it isn't measured as a net income. If you could explain that, please.
Yes, certainly. It is harder on a month-by-month basis for us to say the net, because actually quantifying the different deductions it's more of an annual exercise, and at this point in the life of the unitary, what we've got is previous year's views. So we have the overall model that out of the gross, we aim to see a proportion coming through to the net, but we will need to get into the budget cycle to see the output. And the other part of that is that certainly in the past, the financing element has sat outside the budget that we as a team use. So it's quite a manual thing to build it back together.
Okay, so thank you. So we will have that reported, but probably as an end of year figure, or when will we know those sort of values?
My honest answer is at the minute, I don't know, but I'm sure we would expect to monitor more frequently than annually, but we have to build that mechanism.
Mr. Vaughan, did you want to comment at all on that?
Yeah, just to add, but one of the pieces of the work the team have been doing is actually going around and visiting all of these sites, wearing a Somerset Council hat on to understand where the portfolio sits, the risks, the opportunities, etc. So we will be bringing a report back to members on the whole portfolio, including all of the revenue costs, the financing costs and all of those things, so we can see where the updated picture sits. Because clearly this is something Somerset Council itself has inherited, and members need to understand the risks and opportunities and decide the way forward on that. So we'll look to provide that information to you shortly.
Councillor Rodriguez.
Thank you, Chair. Just going back to page 22, I only wondered at the bottom of that page, it refers to the finance based on an interest rate of 2.3%. I just wanted some background as to why that is. The thought process, though you may very well have an answer for this, is if you based it around probably current interest rates, you're probably looking at something double that figure, if not more at the moment. And that might give us a better current picture. And also, as the reason as to why the figures you provided is derived from the SSDT model. Some background onto that, please.
I think I'll answer the second part of your question, and think that Mr. Vaughan may comment on the first. We had to take a model from somewhere, and that there would have been numerous different models. So this was used really just because it's a concise presentation. Other than the headline gross yield, all of the deductions potentially vary. Some, such as the team costs, we expect to be lower because bringing it all together means we can be more efficient. And the variations in finance rate, as I say, I'll defer to Mr. Vaughan.
Yeah, in terms of the finance figures here, these were the figures used last year, 22-23. As part of that overall portfolio, we'll be updating where they are. If you look at where current interest rates are now, they have increased significantly. We saw base rates at 15-year high, 5.25, and I think the prediction is probably another 0.25% to go. That's base rates. Obviously, if you're borrowing, there's a slight premium on top of that as well. So we'll be updating all that for members and bring that back to you as the whole portfolio, and that's how we'll be managing going forward. Obviously, the different councils in the past took different decisions how they finance those things. So one of the councils, for instance, Mendip, actually locked in its investments that it purchased against longer term interest rates and fixed the loan financing on those. The other three councils didn't, and therefore were exposed to the interest rate increases that we've seen.
If I could come back, thank you for the response. I think my concern, I suppose my first question is when will it come back to us then, really? Because my concern is there's lots of short-term borrowing on there, as you pointed out, and we have councils. And if we're looking at current interest rates, that would obviously increase largely the amount we owe and the amount we pay back. And so my thought process would be, and what I'm thinking is, what would be the return on the investment? Would we actually be looking at a position where potentially that the council is propping up because we're not making that kind of net profit, if you like, back from those investments? That's kind of my big concern. So having that come back to us ASAP, I think it's probably really important at this stage.
Vaughan, if I could just pause for a minute, just come to you next. But I was going to say also, don't forget we have got a working group that's going to be specifically looking at these commercial assets and its realisation and assessment of those assets. So hopefully part of that will feed through the working group and then back into this committee. But Mr. Vaughan.
Yeah, I mean, the superficial answer is given the increase in interest rates that you can see, that you are not making a profit out of these at this point in time.
Thank you. I've got a couple of members who've indicated in the room. That's Councillor Smedley and then Councillor Ham. So Councillor Smedley.
Yeah, thank you. It's all very well hearing about the investments, how they work in the capitalist markets and all that, but there's been no mention of the ethical aspect of some of these investments. I've raised this several times over the duration of this council and previously at Sedgemoor. Sedgemoor is the only council I know of the details of the assets and particularly object to one particular investment there, which I would like to know where we are on that one. I asked the council leaders as soon as they took on those investments whether they'd be de-investing from that, and I'd also be interested to know when we're going to get a list of other investments around the country which might have similar ethical controversies, shall we say. And I would ask if people are happy investing in the arms industry, for instance.
Mr. Vaughan, do you want to start with that? I don't know whether there's one of the portfolio holders wants to come in afterwards. So, okay, Councillor Lakeshaw.
It's a really short answer. Yes, we're aware. As well as a working group for this scrutiny, we're also looking at an executive subcommittee for commercial investments too, because I'm sure many members here will know that the district councils had separate arrangements, like amended. They had the Phoenix board, which were able to move more quickly than the cabinet or full council even, and so we're looking at an executive subcommittee as well. But in reply to Councillor Smedley, we are aware too that a huge amount of work has been done travelling the country and getting all of the relevant information about all of the investments and then putting them together, because of course each of the 4 district councils had a portfolio that was their portfolio. We now have one portfolio and everything needs to be looked against each other, and there may be some where there are investments close to each other, and we already know from the map that there are some that are many, many miles apart. There may be similarities in other ways too, and in actual location of investments, but I know that I'm aware of Councillor Smedley's concerns. I know the leader of council is very well aware. My colleagues, councillors Wyke and Wakefield, are also aware. So please don't think that we are ignoring your concern. That is absolutely not the case.
Thank you. Councillor Wyke, did you want to say add anything to that, or are you happy with?
Thank you. I would concur entirely with what Councillor Ashton has said. I would just say, if you look at the both my track record and my colleague, we do have quite an ethical streak to the way we invest, and I totally appreciate Councillor Smedley's concerns. And
Thank you very much. Again, I've got a councillors who've indicated: Councillor Ham, Councillor Wilkins, and then Councillor Johnson. So, Councillor Ham.
Firstly, I'll go back to the investment made by Lendit with the Public Works Loan Board, whereas all the others have gone short term. How big a problem is the short term in terms of economic viability? And secondly, in the presentation, when they were talking about rental reviews, they were always talking about upward rental reviews. I'm not sure how we can guarantee it will always be upward in the market we're in at the moment. I'd like a comment on that, please.
Mr. Vaughan, do you want to start?
I'll perhaps do the finance a little. My colleagues to come in and more expertise on the rental stuff than me. In terms of the financing, clearly interest rates were at the record low levels over the last few years. That would have been a very good time to fix if you were buying longer term investments. That's what Lendit did through the Public Works Loan or the PW. think my microphone's going. The other three councils took a different approach and borrowed short term. That saved them significant amounts of money in the short term, but clearly as rates rise, that's now flipped the other way and is now costing money. Obviously, as well, two of those authorities were not able to borrow from PWLB once the government brought in some rule changes around commercial investments, where they said if you carry on investing out of area, you will not be able to borrow from PWLB. They carried on with that approach. They couldn't access them at that point in time either. So they're just factors that inherited for Somerset Council. One of the actions we've taken is actually to speak to Treasury and to say, we're Somerset Council, we're a new council, do we have this inherited position? They've agreed an exemption for us that we can borrow from PWLB for commercial investments that historically happened, so they're not tied by those decisions of the former councils. So this is all part of the mix in reviewing the property portfolio that we'll be working through over the next couple of months.
Thank you very much. I'm sure if there's any what's going up.
Yes, I'll certainly explain that. Where the property has a lease in place, the lease defines all of the rules as between the landlord and tenant, and commercial property leases have periodic rent reviews, but they take whichever is the greater of the previous rent or the market rent. So if market values fall, the rent stays the same. If market values go up, and there's a new lease, it has to be rebased to whatever the true rents are. So if you remember the graph with the rental values, you'd typically see rises in rents on industrial and warehouse properties, pretty flat rents on offices, maybe slightly up or slightly down, and on high street retail, you'd see the new rents coming in considerably lower.
Thank you very much. Councillor Wilkins.
Thank you. It's on page 31 of the running yields. Very useful graph for forward projection. Must be very difficult to work out. I was wondering if there could have been provided a retrospective on that so that we could see the trend before we get to the forward projection. Would that have been too difficult because of the separate councils at the time?
Councillor, it's not something we've done in the past, but given that the data is there, we would, in theory, be able to provide that graph so we could see how close to the trend we are. I suppose at this stage we do have quite a lot on our plate.
Yeah,
it'd be a consideration of amalgamating all the historic data from all of the different districts. So you would have to bear with us, but I'm sure it could be done.
Thank you. Councillor Johnson.
Thank you very much. It's really interesting to see this whole gathering of all the assets and get a better picture of it all. My question relates to the graphs on pages 32 and 33. I'm just conscious on page 32 it ends at September 21, and the capital value changes one on page 33 ends at May 18. I'm just wondering when, or is this a delay in gathering data coming through, or is this data that only comes through at certain periods, or whether you have any updates as to those figures that end quite a few years ago?
The data itself is collected all of the time. The council is not a subscriber to the very, very expensive source of data, so we effectively have to use our wits to access data, and although you can get a view of data, it presents in a form that wasn't suitable for this. So we could give some updating of it, but we don't spend money to have the greatest graphical access. So that was a limitation for the presentation, rather than that we don't know where the market's gone.
Okay, I mean, but presumably we are going to need to get some rental value changes and capital value changes data to be able to assess the assets portfolio at some point.
Yes, you're absolutely right. The approach of valuing commercial assets is very much the same as how we all work out the value of our homes, except that you have to access data. So we do research transactions that demonstrate where the market is for each asset, and so it's drilled down to a much more specific level than those broad trends. But that is a key part of the research to have a view on value, and has been very much part of the portfolio review work that's being carried out now.
Sorry, I had a couple of other questions. Can I tag them in? So I was also interested, do you have any estimates of reaching the EPC levels that are required? I understood you said there was some of the negotiations with the new contracts on that work, but do you have any idea of how much money you're looking at to get existing investments up to the EPC levels? And then the final one is the battery energy storage. I'm not familiar with this project. Is there an income from that? I didn't see any data on incomes with that. Thank you.
In terms of the EPC detail, it's a piece of work that will be done in coming months. It's clearly important, but short-term priorities have been things like getting the rent paid and doing the overall portfolio review. So it's on our work program, but we haven't got the detail. In terms of the batteries, yes, they produce an income, but they produce an income to the companies. The model between the three assets is different, and the one that has been operating the longest, which is the Fidio Taunton scheme, because it was a very novel area to invest in and judged rightly as a significantly higher risk market, the decision was taken that all surpluses are applied to repaying the council loans until the loan is completely repaid. So effectively, for 5 or 6 years, there is no actual profit that comes out of it, but we're taking the loan rate down, which in terms of how much we own and how much is debt. The two in Fareham have only been actually trading. I think one of them was the beginning of last year and one was the autumn. We have had a dividend from the earlier of them, which was ahead of expectations, because the world energy crisis meant that battery storages had a short period of massive overperformance last year. So there was an initial dividend, but it's again a bit like my answer around the budgeting. It's quite a complicated journey from the trading results of the joint venture companies through the boards of those companies deciding on a dividend to then pay a dividend to the council.
Thank you very much. I'm not seeing any other questions in the room, but I have got one question in the room, and then I'll come to those online. So, Councillor Shilcott.
Thank you. My concerns from the figures, as we've said, is they don't feel accurate and complete at the moment. I think there's still a lot of work and a way to go. My question to the 151 officer is, as it stands currently, how much are these investments costing us as a council on the books, and how much are we having to pay out, i.e. how much are they actually contributing to this year's budget? That's my first question.
I can't answer that directly because it's not as straightforward as that, because it's partly how we're managing the financing of them through our treasury management activities. So in order to cover the short-term borrowing that was undertaken, that we inherited on the 1st of April, we're actually doing what's called internal borrowing. So we have other investments and treasury investments, as it were, so cash deposits, and we are using that to fund. So it's quite hard to pull you an exact rate, Mandy, at this point in time. I will try my best as part of the overall review to have an overall figure there, but it's hard to give you an exact figure because of the nature of which we're financing it, because they aren't loans sat against this now. So as those short-term borrowings have come up, we've repaid them. You'll see in the report later on, the budget monitoring is about 57 million, I think we've repaid so far this year. we're using our own investments, our own cash that we have sat in the bank to fund those. So it's quite hard to pull together an exact figure. But I will do so when we pull the whole portfolio together, give you a rough figure of best estimate. But clearly, as I said in the earlier answers, you saw on the slide there, the gross yield of the portfolio was about 7%. If you allow base rates are at 5.25, it's actually cost you a bit higher than that, and you've got MRP at 2% on top. That already takes you to 7.25. So you can see overall the portfolio is now costing rather than generating income.
Thank you. That's my question really. Are the ratepayers in Somerset actually subsidising once that all rolls out? And I think that'll be something we're all keen to look at. The second element really is a SIP for guidance, and that ahead of borrowing you should look to dispose. I haven't heard any conversation in relation to that, but that does form part of the thinking, I would hope, with the working group moving forward.
You're absolutely right. It's one of the requirements placed on me to take that. Clearly, what the guidance says is you don't have to dispose, but that should be your first port of call to looking at. That's why we've asked for the review of the whole portfolio, so we can make that decision and actually understand that. So it does fit into this review of the portfolio that will be coming back to members shortly. It's going to be quite a key thing in terms of understanding that. Understanding the risk associated with Somerset Council. As with any investments, there always are risks, and we need to understand both the upside and the downside of those before taking things forward. But you're absolutely right, Mandy. It's a key thing that we will have to take into account when we're reviewing the portfolio.
And Chair, thanks for indulgence. Just my last point, really. I think the table there that showed the amount of income, if you like, and the gross figures, I think for the public's quite misleading. I think at the moment you have explained with the interest rates as they are, it's actually not contributing anything like what's demonstrated on that table. I suppose the ask is moving forward, even if we haven't got actuals, even if you ran a couple of scenarios with interest rate at perhaps 2 or 3 figures, I think it would have given a more accurate potential view of the situation as is. I know it's difficult, I know it's challenging, and I know there's a lot of work to be done, and appreciate that. Thank you.
Thank you. Councillor White, did you want to come in?
Just to give reassurance, if you looked at the papers in terms of the finance paper, which went to the last full council, where there was a report on what we're doing at the end of 3 months, there were 17 very clear actions, and included in there was the one around assessing our commercial investments, in fact, generally across the board with our assets, as to where we can realise the assets appropriately. And so the work is ongoing as we speak.
Thank you very much. I will take one last question from the room. Okay, I've got one. We'll go with Councillor Trimnell, and then I'll take Councillor Wakefield.
Thank you, Chair. It's a really quick question, but I thought that Councillor Johnson had asked most of my question. I was going to leave it, but actually I just want to find out, with the energy performance on page 35, where it says it's 65% of assets at minimum grade C are required, and they're required to be that by 2037 and grade B by 2030. Is there a financial penalty? What happens if we don't achieve those? And are we on track to achieve those? And is it going to cost us a great deal of money to achieve it?
There are a number of questions within your questions. So, firstly, are we on track to achieve it? Yes, but it will require further capital investment in the portfolio. Now, at the moment, everything that we've got is legally let, but from 2027, we won't be able to continue to let unless we get all the properties to a grade C. So there is clearly some work to do. A lot of the work is something that we can cover under the dilapidations protocol, but Harvey previously gave you the example of Imperial House. Now, the £100,000 that we're spending there that's not covered by the dilapidations protocol is to upgrade all of the lighting to intelligent lighting on an LED basis. Now, that will get up to a grade B, and it's similar sort of work that we will do across the portfolio. However, we are not required by law to do any of that work unless there's a 7-year payback on the cost. So it has to be cost effective within 7 years. So for example, if it says you need to install a ground source heat pump, but actually the benefit of that is not going to pay itself back within 7 years, then we don't need to do the work. The other point that I'd make on this is that we as a local authority, as a unitary authority, would be expected to do all of the work on ensuring that anybody within Somerset is adhering to the minimum EPC standards. Now, at the moment, we don't have a department to do that. I don't think that we've ever taken anyone to task for not getting to that standard. So actually, it's really the banks at the moment that are providing that, really acting as the arbiters of that. Now, because we don't borrow from a conventional bank, actually, it's very unlikely that there would ever be any come back to us. It's really just our moral obligation to get to a certain standard.
Thank you. Councillor Wakefield.
Yes, thank you very much. I'm sorry I came in a bit late, so I missed the beginning of the presentation, but I wanted to thank the officers for the work they've done on it. And it's very interesting. I just wanted to say a couple of things. I mean, any presentation about valuation, as they will, I'm sure, confirm, is a snapshot, and it's a movable feast. It really is. It's moving on a daily basis in all sorts of different ways. So when councils are asking for precise figures, they need to be aware that they change all the time. So you can't really say on a particular time it's worth this much, because it may change tomorrow. Having said that, I think one of the questions people have been asking about is this increased interest rates, which we all know about. I'd just like to ask Jason, if he could, to say, I don't think we're actually paying those increased interest rates at the moment. We know they're coming. That's why we're looking at the portfolio so carefully, because they're coming forward. But I don't think most of the investments we've got are paying those sort of rates yet, but they will be if we just go back into the market and borrow at the market rate. So I think that's one of the reasons, surely, for looking at it so carefully, so that we can work out what we want to keep and what we may not wish to keep. And finally, I would just remind councillors that these investments were taken out by the various districts in order to keep services. The reason we did it was not because we wanted to become commercial investors. It was so that we had enough money to keep the services in cutbacks. And that's why it was done. It was done for the right reasons at the right time. And commercial property investment is not a short-term thing. It's a long-term thing. So you don't do it for 5 minutes and then suddenly come out again. You hang on and wait for the market to improve if you can. But you might sell something that's worth money and that's going to give you some good return. You do that. But you don't go to the market with them all just because they've become a bit more difficult. So it's something we're going to have to grapple with, and we are grappling with. But I just wanted to thank the officers for what they're doing in a very difficult time without really enough resource. And also to ask Jason about whether we're actually paying those bigger rates yet.
The answer is sort of. So the portfolio for Mendip was fixed, so that is what it is, and the rate is there. With the other councils, we aren't paying the full rate at the moment because we are not doing external borrowing. We're doing internal borrowing, so that has muted it down, but it still is an increase because that money, it's a bit like your own personal money, isn't it? You've got money in a savings account. You're then drawing on that. You're actually losing the interest you'd have had in your savings account. So that's the cost to us at the moment, is what we would have done with that cash and how we would have invested that in our other treasury activities. But it's not the full PWLB rates that you'd be paying if you externalise the debt.
Thank you very much. We've got 2 members online who've been indicated for quite some time. So we'll come to Councillor Healy first and then Councillor Osborne.
Yes, thank you, Chairman. First of all, I'd like to agree with exactly what Councillor Wakefield has just said. It's not a 5-minute thing. Everybody goes into this, and at this moment in time, all businesses are in the same boat. Chairman, as we all know, and as Councillor Wakefield retorted to, who knows what's going to happen tomorrow. But where I'm coming from, if I may, Chairman, through you, is the opening gambit from officers was about benchmarking South Somerset. So that led me to believe that have they done a benchmark, if you like, an analysis on each of the districts to say who's performing better, what was their assets like, what was their investments like. That gives you a set value to benchmark stuff across the board. And the other question I'd like to ask officers is, where are these voids? From which former councils were these boards? What are they, and how long have they been vacant? Thank you, Chairman.
Thank you. Who wants to take those? you want to go ahead?
Thanks, Chair. In terms of benchmarking and all the data analysis, we've been working as a single on the portfolio review from the end.
Could I just ask you to pause for a minute? We're just hearing there's a problem with the sound, so.
The microphone. Repeat his last words.
Yeah.
Yes, certainly. To respond in terms of benchmarking, we're close to completing the portfolio review work. It has been our major task since just after vesting, and it's one of those jobs that for time grows as you work on it. But once we have everything put together, we will be able to analyse, if appropriate, at portfolio level between the districts. I can't personally see quite what we gain from that because we have one portfolio now. They have differences in their makeup. In terms of the voids, we could produce a written answer to say what the voids are. I can remember some of them, but not all, and I certainly can't say. As far as I recall, probably each of the former district portfolios has got a void in it, so it's a bit of a lottery, as we saw with the announcement of the Wilco CVA last week. It could affect any business.
Mr. Vaughan.
Yeah, can I just correct one of my answers that I gave earlier, because I may have misled the committee because I didn't have the information in front of me. We have borrowed. We borrowed £40 million yesterday for 1 year at 5%. So just to update committee, I didn't think we'd actually done that yet. We have actually borrowed. So our cash position means we are borrowing now. So £40 million at 5%.
Thank you. And in terms of the voids, I think a written answer is fine. We don't expect that to be now.
Sorry, Chairman, could I come back? Do you mind if I came back?
Absolutely. Go on.
Thank you. It's just what the gentleman said earlier about, what's the problem about, why we're benchmarking different districts. I think that's very significant, actually, because what you've got is 4 district councils, as was repeated earlier on, doing various different types of business analysis, business arrangements, and I think it should be very much relevant, because if one outperformed another in that, clearly there's a benchmark there. So why, with the greatest respect, and forgive me for the throwaway statement that was made, I find it very relevant personally.
Yeah, I think certainly from what answered from certainly all the assets are being reviewed as to how they're performing, and certainly the basis on which they were purchased, I'm sure, will be reviewed as part of what is going forward. So I'm sure, Healy, that the whole point is to try and learn from what's worked, and that'll be across the 4 districts that were in place before. Okay. Sorry, Councillor Wyke.
Thank you. Can I, as one of 2 leaders, former leaders of district councils in the room today, I do recognise that each took their commercial investments in different ways, and I think in that respect, Mark is very true. But I don't want to see them going on. Yes, I was fortunate. I was in Mendip along with Councillor Ham, and we during the made a very conscious decision to go for long term, and that reflected our political view about things. But it was just a moment in time when we thought this was the right thing to do, and we got it right on this occasion. And I just think we've got to be careful that we don't play the blame game. Yes, we need to learn, and I don't dispute that, but to start pointing fingers in a negative way may be a little bit unhelpful.
Thank you. And finally, I'm going to come to Councillor Osborne, please.
Thank you, Chairman. Thank you for indulging me, and also thank you to the officers for the very thoughtful presentation that they gave. Just a point to note that Wilco was acquired before Robert Orritt joined us. At that point, that was a council-made decision. Robert joined us after the acquisition of the 2 retail properties, which were also, I think, acquired as part of helping to regenerate Yeovil. That's just an aside. Going to look at opium, what you didn't mention was that the then district council loaned opium the 48 million for a period of 20 years, 25 years, and it was fixed at 4%. Am I correct on that? Because that's what I've seen in previous papers. And what are the implications now going to be? Because that was all done on short term, which was fine because we actually made money on it. We could borrow at less than 4%. So part of the income, I guess, for us was that margin. Now that you've just informed us that you've borrowed 40 million at 5%, that clearly means the roles reversed and that we will actually be paying to carry on servicing that loan to opium for the next less than 25 years now. So what is the implications for the portfolio of that? And how much have we got left to mature on short-term borrowing? And what will be the impact on reserves? Because it's fine doing internal borrowing, but you can't keep spending that money. You can only spend it once. So what's going to be the long-term impact on reserves going forward? But I think it would be important, and one of the things you didn't put in there is a schedule of when all those short-term loans are going to mature and what steps you're now going to take in terms of treasury management, and what the impact of that is going to be on the bottom line. Because as another speaker pointed out, it is clear that that Somerset model is now out of date because interest rates are not at 2%. They're actually much, much higher, well, 5%. And when you add an MRP of 2%, that gives you 7%, which is basically wiping out your income. So how are we going to handle that going forward?
Okay, thank you. We'll come to Mr. Orritt first and then Mr. Vaughan, or Mr. Hicks for the later. So Mr. Orritt, do you want to start with the first part of the question and then we'll move on to the finance with the finance team?
The one part I'll comment on is the actual rates as between the council and the joint venture companies. So the 2 Fairham schemes, yes, the rate is defined as 4% and the structure is like a 25-year repayment mortgage. The Fidioke scheme, there are 2 components. One of them's at 5% and one of them's at 7.5%. But that debt gets paid down much more rapidly as well, so it's a different model. That's my only contribution.
Thank you.
When you'll recall from the old South Somerset days, the borrowing is never attributed directly to any particular asset. So what happens is it's all done on a cash flow basis. So it depends on the need of the cash of the authority at the point in time, and that's based on kind of when council tax comes in and we have housing benefit payments going out. And so we can do a piece of exercise to look at, and that will be wrapped up in the exercise that is coming forward in terms of what is the actual cost of these assets, to answer other members' question in terms of are these assets now costing us? But I think what we need to do is have a look at what's the effect of some of those assets if we took them out of our cash flow, and so that if we did actually have potentially long-term borrowing on all of those, what would be the effect on the cash flow? But it's not just a simple answer, but I think we need to do that, Councillor Osborne, and then have a look at what the effect of that opium loan is on that, if that's okay.
Yeah, that's fine. I know there's a lot of reviewing. Ros referred to the 17 action points and reviewing the portfolio. What is the deadline for completing this work, or when do you see this work being completed? And more critically, when do you plan to bring it back to scrutiny or to members for our perusal?
Mr. Vaughan?
I haven't got a precise timetable for you. The review of the portfolio in the practical sense for the property team is more or less complete now. We then need to do the financial aspects of that. We will take it through the various democratic processes. So shortly is the short answer without putting a precise month on it. But we are getting on with it and trying to do it as quickly as possible.
Thank you very much.
Thank you, Jason. I've got a couple more questions, Chairman. I'm really, I don't want to delay you any further.
If you could
The first,
keep them short, please, Councillor Osborne.
yeah, sure. Yeah, it's pretty snug of going last. What are the implications for our portfolio with the Wilko thing? There's been an awful lot in the press about it, and particularly that one of the consequences of a CVA would be that some landlords could find themselves basically giving Wilko or maybe its successor up to 3 years rent free. So we would have an asset there that's cost us 4 million, generating no income, but we would obviously be absorbing the costs on that. So what are the implications for the portfolio of that?
I think so today's presentation to Scrutiny was supposed to be a general introduction to give you a flavour of the portfolio, to outline some of the work there is, to set out what's going forward. We didn't really want to get into the commercials around individual assets because I think we start getting into a difficult place and perhaps not in the public arena if we're getting down to the real nuts and bolts stuff. So it's a valid question and something we will answer, but perhaps not in this forum. Happy to speak to you outside if that's helpful.
I think what might be helpful is because clearly residents will ask questions of us, particularly those of us that are based in South Somerset, because they will be reading all this stuff in the paper, and even the Leveller this weekend published its own piece, probably based on what it knows and what it's trawled. I think it would be really helpful for members to have at least a confidential briefing, so as they are able to provide residents with facts rather than fiction.
I think that's something that we'll take on board. I mean, but I think, as Mr. Vaughan said, I think a forum of an open scrutiny meeting to get into the details of individual leases and rentals, I think is something we need to be careful not to do. What was your second point, Councillor?
My second one was, again, we don't necessarily want to get into the specifics, but I keep hearing mention that the other half of the opium partnership may be looking to sell their stake. Is that fact, or again, is it fiction?
Again, Councillor Osborne, I don't think that's something that we can deal with in this scrutiny forum. I think maybe that we want to take that with officers outside of this meeting.
Yeah, that's absolutely fine. But again, I think because of how opium's finances were set up, it was 100% short-term finance on a long-term loan basis, and that
again, Councillor Osborne, I don't.
Again,
I really don't want to start getting into the details of particular assets at this meeting.
No,
we've
but
had
again, a member briefing would be helpful because the only chance that members have is by coming to scrutiny meetings.
Okay, Councillor, and certainly members within the room and officers within the room have heard your suggestion. I think it is something that will be taken on board. I've got Councillor White wants to comment, but again, if I can ask that we steer clear of getting involved in detailed discussions about individual assets.
Absolutely. I think we all need to be mindful. We've got one word here, and that's commercial. And at the moment, that means we're dealing with individuals. There's a lot of press comment. I'm sure you're seeing social media comment and where else where you're talking to residents. The reality is we are in a commercial market and we need to protect information in every shape and format, because it's not only what is said here, but what is interpreted and how it's reported. So put that all together. This has to be, I'm sorry, you're not going to get a detailed response. And I totally agree with the chair, but we need to be very mindful what we're trying to do here today. And I think you've had a very fulsome presentation of where we're going and what we're trying to do with a collective 4 different inherited commercial portfolios. And we'll continue to be as transparent as we can. But the reality is it is commercial, and we do need to keep the confidentiality of a lot of the figures. And I appreciate your interest, but at the same time, we cannot expose our commercial dealings into a public meeting.
Thank you very much. Thank you all very much, and if I can thank the officers for the presentation, I think as has been said by a number of members, it has been very useful for us to get to this level of detail, and also thank the members for their questions, because I think it has been useful in bringing information out. We obviously have got a major piece of work in terms of integrating the various portfolios that have come from the districts, and the process of reassessing all of those assets is obviously underway. I think as was mentioned by one of the speakers earlier, someone turned on a, it's bad enough hearing me once, let alone more than repeated back. All I was going to say is it's important, as was said by one of the speakers, that we look at these as capital assets, but also as sources of revenue, which is what they were originally created for. And that assessment of how that works with the borrowing changes is something that is obviously under review. And the feedback I'm feeling today is that in the climate that we've had, the assets generally have been performing pretty well, but the climate is very difficult. So we've heard that obviously the executive has set up a working group to look into this. We've got our own working group looking as well. So we will be following up with officers in further detail to take this forward. So hopefully that's a reasonable position as to where we are now. It's going to be a moving piece as we go forward, but certainly I think it's very important to the authority to assess these, both as I say in terms of capital and revenue, because it's two sides of the same coin. So if anyone is happy that I think we have given a very good hearing to the commercial investment, and as I say again, thank you very much for your presentations. And can I apologise to everyone in the room and also those online just for the difficulties we've been having with the sound. It has made it a little bit more difficult than it otherwise might have been. So members, if we move on to agenda item 7, and I think Councillor Leychamp isn't back with us yet, is she? No. So in which case, Mr. Vaughan, I'm going to come to you first for an introduction and then move on to the presentation, please.
Yeah, I know Liz has got another meeting that she had to attend. She'll hopefully be back and pick up any points she wants to raise. So the report before you today, page 43 to 120, so 77 pages. I would apologise for that, but I'm not going to, frankly. I think there's some really key information in there. So I don't apologise for providing so much financial information to you, given the position that we're in. So this is the month 3 position, so the end of June. This report comes here, and we're asking you for your comments and observations on it that can be fed through to the executive on the 6th of September. The executive will also get the month 4 report as well. And I'll talk through recommendations that are going forward to the executive. I'll just pull out a few things from the report. Before I get into that, I would also recognise that I think its finance have turned out in strength today, as you'll see at this end of the table, where the finance business partners, so these are the key people that do the interaction between finance and the services to make sure all the financial affairs across the services happen how we think they are and are reported to members, etc. Do you want me to introduce them? Yeah? Well, Nicola, do you want to introduce your team and go through? And we have got some of the other team members are actually online as well that couldn't be here. So you have got finance and strength today, I'm afraid. But
I actually do think it's quite nice if they introduce themselves and say which area they cover. So, but if they can go, we can pass the microphone. My name's Nicola Hicks, for those that don't know. So I'm the Service Director for Finance and Procurement. So I've got finance, procurement, as the title says, but also revenues and benefits in that as well.
Good morning, everybody. So I'm Chris Evans. I'm Strategic Manager within Finance. I'm currently the transitional lead for the Finance Business Partner team. Obviously, it's an interim structure at the moment before we go through the full structure. So obviously, we are supporting all the services as they transform as well. So I'm currently the lead for that.
Hello, good morning. My name is Kerry Prisco. I'm the interim lead finance business partner for community services. That includes also the housing revenue account.
I'm Penny Gower. I'm the finance service manager for public health.
Hi, I'm Siobhan Cleverley and I'm the Finance Service Manager for Children's Services.
And I'm Sian Kenny. I am a strategic finance business partner for Children's Services, which covers children's social care, commissioning, education and inclusion.
I won't prolong it by introducing them online, but I know there are at least 4 of them online in terms of, I think, Paul, Kerry, Joe and Guy are also online. So you've got the full remit of everybody across finance who's dealing with all this today. So in terms of the report before you, just pull out a few things if I can do. On page 44, you will see the headline at the top of the page there in terms of the budget and the size of the predicted gap at £28.6 million predicted, which is 5.8% of the net budget. And then the bullet points in 3.3, you'll see the key variances there are within that across each of the services. And then the report goes into a bit more detail around each of those and provides a detail as to why those variances are there, and also the key part that we're trying to do in the focus of budget monitoring going forward is, and the so what question, what actions have been taken to address that, because I think that's the key thing. We're trying to make this not just a report that's giving you numbers, but a report that actually is giving you some actions as well. So that's what we're trying to do. There will be a further discussion, particularly with this committee, but with members more generally, around the format of our reports going forward. So for Q2 in particular, we will have a new budget monitoring tool in place following the introduction of the new finance system. We'll be able to look at the formats of reports we bring to you. So something to keep an eye out for going forward. So the report here focuses on the revenue budget. There is also a separate report on the HRA, and going to the executive will also be a report on the capital programme as well. If I turn to page 47, it's funny you're saying turn to and you're flicking through a screen very quickly, aren't you? So this is then the start of the actual report that will go to the executive. You'll see here in paragraph 2 some of the high level, I would say, reasons behind the variances that we're seeing. So that very high inflation rate. Inflation has been at a 40-year high. It is starting to drop. I think when people think it drops, they think it goes negative, so your costs reduce. They don't. They're just not going up by as much. So something that you bought last year is still costing you 7.9% higher this year than what it was last year. And last year it went up by 10%. That's what the effects of inflation are. It's that ongoing increase rather than reduction. That really is impacting on the council as much as it is you and your own individual lives through for the various things that we pay for. Interest rates, we've touched on those earlier. We've seen interest rates significantly increase over the last year with continued rate increases by the MPC at each of its last meetings. They are expected to be close to the top on all the forecasts now. I think most commentators are saying we'll like to see another 0.25% rise potentially, and then hopefully that will start to decline over the next 3 years and we'll start to see some reductions there. In terms of our care costs, and these are a big part of our budget, we are seeing some increases in demand in some services, but it's not across the piece. It's also the costs of dealing with those. And certainly in children's, it's around the complexity we're seeing around some of those cases as well. So it's not just the numbers coming through, it's the actual cost then associated with that. And the other thing that's really impacting us is the labour market. It is really difficult to recruit staff at the moment. Everywhere is seeing that. I don't think you can walk down any high street and see not somebody trying to recruit people. It's no different to the council. That does have an impact on our costs. If I move on then to page 49, you'll see there the summary of the budget broken down across the various areas and the variances that there are, how that £28.6 million is broken down across each of the big areas. In paragraph 7 of the report, Setting out the framework for which we manage finances within the new council. And this is slightly different to how all the other councils manage finances, I would say. Service directors are responsible for managing the budgets. It's not me. If it was me, we'd be underspent because frankly, I wouldn't allow it. I'm an accountant. Nobody would spend anything. You wouldn't achieve any of your priorities because I just stop you spending everything. Some of my other colleagues might be breaking the law by not doing care and things like that, but finances would be perfect. That's not how we operate. We operate in a dynamic environment. We have the service directors who are responsible for their budgets, and that's how we manage things. Therefore, the actions we're taking to address it sits with the service directors. So they need to come up with financial recovery plans for their services. And part of that is we put some tools in place to help them. They need to look at the savings that they can make based on last year's outturn, the savings that they promised they would deliver for this year, and I'll touch on those a bit later in the report. They need to make sure they are actually delivering on those. And on staffing, we're not saying there's a recruitment freeze because actually that can be counterproductive and actually cost the council more money. We're saying service directors best know how to run their services. In some areas, it might be not filling a vacancy could save them money. In other cases, actually filling that vacancy actually saves us money and not taking on temporary staff or doing it in different ways. So we're putting that responsibility down to the service directors to actually do. In paragraph 8, and I apologise, there's an acronym slipped in there, Directorate Management Teams, DMTs, we're saying within each of the services, we're saying to the service directors to have a look at how they manage spend within their areas. The service directors delegate their budgets down to individual budget holders, and we've asked them to look at the limits and the levels at which they impose their expenditure limits across their service. So it will be slightly different for each service. So if I was to pick on adults, the type of spend in their area is significantly higher than something like, I'm seeing Sarah sat over in the corner there, in terms of LCNs and things like that. So it's appropriate for the appropriate service. We're aiming at the right levels for those services. The recommendations going forward to the executive on page 50 in paragraph 10 there are therefore to unfortunately note the predicted overspend of 28.6 million, to request that each of the scrutiny committees has a look at the budgets for their areas. Clearly, this scrutiny committee has a look at the overall budgets, but we're also asking the other scrutiny committees to have a look at their areas in detail. You would expect adults to look at their budget in detail, etc. And some of that work I know is starting to happen. To set up some member briefings on the financial situation, when we've done the first one of those, so hopefully members have received an invite for the 24th of August in the afternoon in Yeovil. There is a briefing by Rob Whiteman, the Chief Executive SIPFA, and also Mark Pickering, the Chief Executive Officer of Arlen Close, our Treasury Advisors. That won't be the only member briefing. There'll be a series of member briefings between now and when the budget is set, going through our finances. It's really important that members understand as much as they can do around our finances. It is a complex area, but I think some of the questions we heard today around the commercial property and things like that, there's lots of areas we need to get members up to speed on for the new authority. So we're looking to put that whole series of briefings in place. And the final recommendation there, and it's been one of the debates we've had here before, is around the frequency of budget monitoring reporting. I was hoping that we could be effective and move to quarterly reporting, which is the kind of norm across authorities. I think given our financial situation, that's just not appropriate and it needs to be monthly reporting to members. So that's the recommendation as well. If I move on to page 53, I just wanted to point out towards the bottom there of the page is, I think the current year's budget outturn projections can't be viewed in isolation. They need to be set against the context of the 22-23 financial year. We are finalising the accounts. We've got one set of accounts still to do and to publish, but overall we're estimating that the overspend for the year was around £20 million. And then at the very bottom there, and split onto the next page, is the medium-term financial plan, where our forecast that we did back in February that went to council was that we need to find £100 million worth of savings over the next 3 years. So we must view this budget monitoring report into that context. There's quite a lot of detail in the report setting out all the various things. Because this is a quarterly report rather than a monthly report, there's a bit of extra detail as well. And the first of those is on page 98. And that sets out, when we set the budget back in February, there was £40.9 million worth of savings. And this is the monitoring against that. So you'll see the table in there, and it goes on to a graph, a simple graph a couple of pages later, sets out against each of the services where we think we are with those savings. So whether they're on track, whether they've been achieved, whether they're at risk, or whether we think they're unachievable. So that's part of the quarterly reporting, and we will continue to do that. And then slightly further on page 102, where we also cover off Treasury management, so reporting our investment portfolio as at the end of June. You'll see the drop in our investments there of £49.1 million. Then on page 103, you'll see our debt portfolio there and the changes associated with that. There will also be separate Treasury management reporting to the Audit Committee. We have to do a 6-monthly full detailed report to them. So that's the general fund. Then on pages 105 to 120, we have the housing revenue account. Hopefully that report, I think, provides a really good overview of all the activities in the HRA. And if you've read through that, you'll see there's quite a lot of commentary around all of the various issues within that. I just draw your attention to page 120 right at the end, which is the summary of the overall HRA position. We're forecasting at the moment the first quarter that to be online, but that sets out the kind of the overall budget and gives you a feel for the HRA, which I know is new to some of the members. So hopefully that's a helpful overview of the sort of revenue budgets and the financial position. What we're asking Scrutiny Committee today is these reports are going on to the Executive next month. Do you have any observations or comments on them, and the actions that we set out to bring the budget back in line? Do you think they're appropriate? Is there anything else you'd wish to add to them?
Thank you very much. Councillor Trimnell.
Thank you, Chair. So I suppose my question would be that you've said that there's £100 million worth of savings required over the next 3 years. But when will we get shorter term costed targets where we know what needs to be achieved during a period of time to achieve that overall aim? Because at the moment, there aren't any targets, there are very few figures, there are some ideas of things to do. And I just wonder how long it's going to take, because I think I read somewhere else, and I can't find it now, that we needed to take the action quite fast and we needed to be quick on our feet on this. And I'm just wondering, how quick are we going to be able to be, and will we achieve that 100 million, please?
So there's a combination of things we need to do. So there's some very quick short-term actions, and they are really focused on turning around the current year's financial position. We need to get on top of the projected overspend in the current year. That's got to be the priority. So dealing with that £28.6 million is the key area of focus. We are also working on next year's budget, and then that flows through for the following years after that. And that's the £100 million that we're talking about as those future years' budgets. Clearly, if we get on top of this year's, that puts us in a better position to deal with the challenges ahead. We have started that process off. So the financial strategy paper, and it's got the table in there of the 17 key actions in this report that was approved by the Executive in July. We started off the process now with our service directors, We've done a briefing with strategic managers last week, and we had about 80 of those to go through the position, and we've requested they complete their capital bids, their pressures papers, so all those costs that we expect to see in future years, and also their savings ideas. Various timetable, sort of mid September is the piece of work that we get back from them. So then there's an intensive piece of work of working that through between then and December, when the executive will form its budget proposals. So that's the time frame we're working to. The next 3 months are going to be really intensive as we work through both dealing with the current years and focusing on how we start to address that 100 million. Part of the work we need to do is assess whether 100 million is the right figure. So like I said, that was done in February. There has been some things that have changed. So the government, for instance, has made it clearer around some of its funding intentions, as in to not review some of the funding formulas to local government. But last week they did announce some additional money for adults, £600 million nationally. That affects the current year to £3.8 million, and also has an impact of next year as well. So we need to factor those things in as well to update that forecast and then work on the solutions to it. So it's that intense period from September to December.
Just very briefly, so will we receive a report with those costs so that we can monitor what we're achieving against those aims?
Yeah, so in terms of the financial strategy, you had those 17 key areas, and this committee at its last meeting agreed that you'd look at those, and we'll provide an update on those on a regular basis. The other task that we've set service directors to do is to come up with budget savings options. Obviously, they'll be go through the usual democratic processes, and some of those will be subject to quality impact assessments and things like that before they can go to members for a final decision. Once they're approved by members, we then monitor them. So that's why in the budget monitoring report, we do monitor against that £40.9 million of savings that you approved back in February. We keep the track record, running record against where they're going, because it's really important that we do that to keep on track of, people have said they would deliver X. Have they actually done it? That's what we were doing. So absolutely, yes.
Sorry, just finally, when you said that will come to members, is that members of this committee or members of the council overall?
Both. So this committee will see the final budget proposals that come through, and one of the things we will be doing is might be bring some things earlier to members than we've traditionally done. We're not just sitting back and waiting for February. That's a magic date in terms of setting council tax, but it's not a magic date in terms of anything else. So actually, if we've got fully worked up proposals, we will bring them to members at the earliest opportunity. One of the things we've raised corporately from finance point of view is the scrutiny timetables does not fit with the executive. Most of your meetings the day after or so of the executive, that isn't really helpful. We can bring to you what executive decided the day before, but that isn't what we want to do. So that's a task we've set our democratic colleagues to say, can we have a look at the timetable? Because actually it's better if this meeting is a couple of days before the executive rather than after it, so we can feed your comments through. So we're looking at addressing that part as well.
Thank you.
Thank you. If I could ask a couple of questions, if I might. In terms of the report itself, on page 49, you've got the table which shows the original budget, current budget, and full projection. It might be quite useful to have a comparative in there of outturn of last year in terms of where the budgets have changed, just to see how that works. But also the other thing I wanted to ask you was, obviously we're asking a lot of departments to come up with savings. I was quite concerned on the following page, on page 50, item 9, it appears to suggest that 28% of last year's savings have either been now put at risk or unachievable. And if we're needing to make savings, we need to make sure what's being put in place is doable. So how are you going to address that? And the final question I was going to ask was, in the executive resolutions, they're good as far as they go, but as far as I can see, the first one is to note something, the second is to review, the next one is to inform, and the next one is to update. But what I'd like to see going before the executive is what's the action that that's going to be driving something to actually happen, rather than just telling us how bad it all is. how do we get out of where that is? So that's the next question.
Okay, I'll just unpick some of that. In terms of the previous year's outturn, obviously Somerset Council didn't exist, so we haven't got figures to put against there. What we will have a look at though, when we have finalised the outturn of the, some of the services we do, so adults and children's remain unchanged. Some of the other areas are difficult. So we'll look at what we can do and can we bring it together in that way, but that may not be a quick fix. So I'm not going to promise on that one, but yeah, point taken. If I rolled this forward a year, the answer would be yes. In terms of that paragraph 9 there on page 50, is it wrong? Yeah, for me that's one of the key things. So last year people put forward savings proposals, members agreed them. We now need people to deliver on them. Things do change. If they can't deliver on those, the proposal is they come up with alternatives. So that is one of the recommendations. So in terms of looking at the actions then for the executive, it actually is reinforcing people to look at the savings they've put forward, because that's partly behind some of the variances, and say you now need to deliver on those. And also by saying to service directors, what are the actions you can take to bring the budget back on track. Now, there are some areas you can't do that for. So if I take one we talked about earlier, our borrowing costs, I cannot tell the Bank of England to lower its interest rates. Well, I could do, but they wouldn't take a lot of notice, would they? There are certain things that you just can't control. But what can I do to mitigate that? So I can have a look at my investment income on the other side and say, actually, can I use that to offset my borrowing costs and things like that? So that's the actions we're putting back on service directors that the executive will monitor and hold them to account for.
Thank you. I've got Councillor Rodriguez and Councillor Wilkins who indicated so far. So Councillor Rodriguez.
Thank you, Chair. I've got a number of questions, but perhaps I'll ask just a couple and then see if anyone else will ask any of the other ones that I had written down as well afterwards. I'll come back. Firstly, on page 48, at the end of paragraph 3, where it talks about the overspend being of significant magnitude to potentially destabilise the authority's financial assistance sustainability if it's not managed down. What I wanted to know from the Section 151 officer is, in his view, what does he think managed down means? How is that measured? I'd quite be interested to know in a figure, because it's a huge overspend. I'd like to know his general thoughts on that.
So, in general terms, we have around £100 million worth of reserves, generally in earmarked reserves. That's what we estimate at the start of this financial year. If we were to overspend at year end by £28.6 million, that's 28.6% of our reserves gone. It doesn't leave us a lot left going forward, given the size of the gap. So that's what's behind that comment. I don't, ideally, I'd like to see us underspend for the year. That's been my preferred vision. I don't think that's realistic given where we are and given the whole environment. When I'm looking up and down the country, the majority of authorities are projecting an overspend in the current year. But I would say most of them are in the sort of 5 to 15 area of sort of spend. When you look at the upper tier authorities, it's that sort of magnitude. So I think we've got to reduce ours down. Ours seems too high to me compared to the others, and I'd like it to be more at the 5 end than the 15 end, if I'm honest.
Thank you. Next question is it's around page 50. Highlighted here. So recommendation B requests the Scrutiny Committee and the executive members. My only concern is, considering as well, I mean, we know what a difficult position we are in, the references to the overspending staff potentially stabilising, the reference to the council needing to move at pace. I'm only concerned that there's no kind of target date or deadline in which for that to come back to scrutiny, or for when the executive members need to be considering that. I think we should be pushing for some sort of limit on that, because like you've already said, we need to move at pace, and there's no pace there apart from them telling them what to do. And that's also the same, I think, around pages 55 to 60, many of these target areas, again, don't have much in terms of target dates. And I don't know how those are going to be measured at the minute, most of them. The one exception, I would say, is on the review of school transport, which refers to savings in year 1, year 2, year 3, which I think is quite good and quite measurable, but all the others are not. And that concerns me that perhaps we could be taking things a bit more serious than what we are potentially looking at that. So I'd like your comments and views on how we make that a bit more robust.
Yeah, so that extract of the table on pages the 5 or whatever from the financial strategy. So that's a straight extract from financial strategy that was approved by the executive in July. What we are doing now is putting those bits that both you and I want to see around, and dates and payment notes against each of those. So that will be coming back to this committee. It's the next meeting with the first go on that. Some of that will be refined because we're reliant on others to come up with the detail around some of those things. But the intention is that's the headline stuff, the detailed stuff that you're talking about absolutely needs to be added into those. So that's the starting point. In terms of the request to the recommendation to executive to request that the scrutiny committees look at the budgets, I think it's a valid comment that this committee could make on to the executive to say that actually it needs to be done urgently. I would love all committees to meet as soon as possible and deal with this. We are facing a very difficult financial challenge. You can't dress it up any other way, and we need to take actions, and the appropriate scrutiny committees, I think, can help with that. We're not just doing it to the sake of doing it. I think they can actually help and progress things. So if the rest of the committee feel that's appropriate, I think that would be a helpful comment to pass on.
Okay, we've got one last one, and then I'll move on to the next.
Wait.
All right,
Unless
no
anyone else
problem.
asks, I don't hear my voice.
So I've got Councillor Wilkins and then Councillor Lovell. Wilkins.
Yeah, on the recommendations again to executive, just on point C and D, how geared up are you to be able to provide that information?
I'm looking at the team to my right saying, yeah, I have to put this into context. You heard people introducing themselves. Apart from Nicola and me that are appointed, everybody else is in effectively transitional temporary roles. Just put in a new finance system. We've just brought 5 lots of finances together. We've just closed down 5 sets of accounts. We're doing our best, but this is not easy. It's not where I'd want to be. I'd rather we were facing this challenge a year ahead, because I think we'd be in a far better place with a stable workforce, understanding our systems and a lot of our place. But this is a priority. I don't think there's any choice but to do monthly budget monitoring. Like I said, I did toy with the idea of going quarterly. If we were in a stable position, I think that's okay, and you could have supplemented that in different ways. I just don't think, given the size of the problem we've got, we can take our eyes off the ball for that long. So it's going to be a challenge, but it's something we've got to do, I'm afraid.
Okay. Councillor Lovell.
Thank you, Chair. We've been told about 2 flagship solutions over several months. I'm going to take out Newton in adult social care and Homes for Horizons in children's. We've heard a lot about them and what they're going to do. My question is, how will we know that these 2? Well, I'm only using these examples, but how will we know that these suggested solutions will have delivered? Thank you.
I'm going to do another thing and bring in one of my colleagues who I know attended adult scrutiny recently. I don't know, Penny, if you could talk about Newton and how that's being monitored and ordered to members, etc., because that might bring that to life a bit.
Okay, so in terms of Newton, so we're doing regular updates to the adult scrutiny. I'm also taking it to the transformation or to TCV change board to provide to make sure we don't lose that track back of that. And then there's obviously push back and challenge on the service or where they are with it.
And in addition, the monthly budget monitoring report should pick up on those things, so they've got actions against them and savings lines against them, so we'll make sure they're commented there as well.
Could I just follow up on that, just for an explanation in terms of where we were looking, or where I raised earlier, there were some things that were at risk and others that were unachievable. So I think it's on page, where am I? Page 55. It refers to, I think, the Newton one, which is being rescheduled as to when savings come in. So does that come under those figures of at risk or unachievable? Is that included in there, or is that because they've got a schedule that is okay? Because obviously, depending on how far we're going to reschedule savings down the route, we might have more of an issue.
Yeah, so in terms of the Newton work, when the budget was set back in February, they were confident they could deliver £10 million worth of savings, and the best estimate they had at the time then was a split of £5 million for 23-24, the current financial year, and £5 million the following year. I think now they've finalised the reports, and that I was going to say signed the contracts, and I'm not dead sure whether we signed pretty close to finalising the contract. That profile has altered. So actually a lot less savings in the current financial year, around about 200,000. However, we have secured a contribution towards the costs of this from the ICB of £2 million, which will help offset that. Overall, though, their stretch target is more than the 10 million. They think they can actually deliver more, but it will come in later financial years.
Proof of pudding and all that. We'll see. Councillor Locke.
Thank you, Chairman. It's not specifically a question, but I'd just like to say something while it's in my mind here. Listening to Jason, going through the report, and councillors, and the gravity and the seriousness of the situation where we were, and we appreciate that I don't want to go backwards. I mean, we gotta go forwards, and everyone needs to work together to get us through where we are at this particular moment in time. But could I just make a plea from some channel in the authority, whether it's this committee or not, that an information sheet goes out to every councillor, because these financial briefings, which are being arranged for us all to explain this situation more fully, I think that councillors should be encouraged to attend these, because there are a lot, possibly, and perhaps I do them an injustice, out there who don't exactly know the financial situation and the gravity of it moving forward. As I said, I don't want to go back in time of the reasons why we could be in a better position and things like that. But we all here, irrespective of a political persuasion, have to work together for the benefit of the whole of Somerset. But I think that's important, that councillors need to be really, really encouraged on the seriousness of the situation to be able to report back to their parishes and everything else to attend these financial briefings. Thank you.
Thank you, Councillor Locke. I think I couldn't agree with you more. I mean, it is imperative that obviously this information is spread as widely as possible amongst members, because ultimately, if we don't get the finances right, we're not going to get anything else sorted, because that's where it's gonna we're gonna crunch. But thank you ever so much. Any other questions within the committee? And then I'll go to Councillor Rodriguez, and I've got someone waiting in the wings as well. So Councillor Rodriguez.
So just, I know that the recommendation is to take this to various scrutiny committees, but I did have a couple of questions about some of the other kind of service areas. The first one, I think, which is probably one of the most concerning ones, is 66 to 69 children and family services. It's nice to see so many here. The biggest kind of variance on there is around external placements. And I see that you're projecting an external placement overspend of, oh, sorry. The projected external placement overspend, 3.5 million. And I'm just wondering, I did just a bit of maths, and I'm sure you'll tell me if I'm wrong. But if the demand continues in the trajectory which it has so far in this first quarter, you're probably looking a £8.3 million overspend. If it does, I'm assuming that you think that's not the case because your projected overspend is a lot less, in fact, less than half of that. So I'm just wanting some background information on that and how you intend to manage that particular overspend as well.
Who would like to take that?
I can see them all staring at each other down there. So just to be really clear, we don't manage this, we're finance, we put the numbers together. That should be a question for somebody within children's services that manage the budget. They'll be able to tell you, what actions they're taking. However, I'm sure Sean can help clarify a few parts on this one.
Hi, so the 3.5 million forecast overspend is specifically around unregistered places, which is part of the external placements. So the 3.5 million is part of the 8.8 million forecast. And that forecast is made up of past placements that have taken and current placements and a forecast around where those are likely to be.
Could I just ask you to pause a minute? Again, I'm getting told there's sound problems, so we're going to try and.
Sorry, Sean, I think that microphone in the ceiling is causing a lot of interference. It wasn't wrong. It's just somewhere else. Sorry, it just,
It's nothing personal. We're not sending you out the room.
Leave that microphone. Okay, so I'll repeat that last bit. The 3.5 million forecast overspend is specifically around unregistered places, and that's part of the total external placements. So other placement types are residential, fostering, over 16 in supported accommodation. So the unregistered placement of 3.5 million is around a specific group of children, and the forecast is made up of those children's places that have already taken place, and we know what we've paid those providers and we know what we've put in around those children in terms of additional support. Then we take the current placement numbers and those current children in those unregistered places, and we make an assumption with the commissioners and with the operational teams in the service and the social care staff around where those children might be over the next month, 2 months, 3 months, up until the end of the financial year. And some of those children will be forecast to come down into residential placements and move out of those high cost unregistered placements. They could move into foster care, or they might go into the Homes and Horizons with the strategic partners, with the new homes that we've got in house. So you can't take a straight line forecast and say based on existing spend where you think it might end up, because it's around particular children with particular types of needs, and the commissioners and the operational staff and the social care staff saying where they hope those children might be at some point in the future. And then if you add those unregistered placements where we're forecasting to spend by the end of the financial year a total of 3.5 million for those types of placements, if you add them to all the residential, the fostering, the supported accommodation, forecast in a similar way, so looking at known children but also potentially where they might be before the end of the financial year and any new placements that might come in, we're forecasting across all of those external placements an 8.8 million overspend.
Thank you for the detailed response. I was going to say it's disappointing that we haven't got perhaps some people in that service to respond to the questions. However, I think we've done a little bit to answer that question, so thank you. Another one I had, and I suppose the answer may not be given because the particular person that perhaps has the answer may not be here, is page 85. Let me just scroll down. Still scrolling. And this is just perhaps questions that can be put to whoever is responsible for this particular budget, not ones that perhaps I suppose may not need a complete answer now, is on the waste services overspend of 3.4 million. I was just I was a bit confused by the explanation in the bullet points that were given on the bottom of page 85 and the beginning of page 86. In regards to the second bullet point, for example, which talks about the bank holiday for the King's coronation and that there was an impact on waste collections, I was of the memory that that particular bank holiday was announced well before budget setting, and so I'm not sure why that wasn't considered when budgets were set, and I recognise I may not need an answer for this, but the second one, bullet point 3, is around the change of legislation being given as a reason. As far as I know, consultation for that started in April 22, so I'd just hope there'd be some forward thinking, and I'm sure there is, forward planning on that. And the first bullet point, actually, which I've missed, so I do apologise. And again, this is probably a question which the particular committee may be able to answer and extract information about. In regards to the increase in residual waste, I know, for example, in my division of Bridgewater East and Border at the beginning of the year, I didn't receive one of those handy calendars that I remember we used to receive quite often. And many residents contacted me to say, where are those calendars? And I just wondered if that had an impact on the increase in waste in that first quarter. It's hard to tell by just having a quarter one rather than a month by month kind of figure on there. And also on page 86, again, same around infrastructure and transport, perhaps again, it's going to go to particular scrutiny, is around the overspend and the increase in safety defects across the road network. We know that the government did allocate a considerable sum, extra sum that wasn't budgeted for road defects. And I'd like to know, perhaps at a future date, how that's impacted the budget, and if that's been taken into consideration when coming up with this £1.1 million figure in overspend. I think the gist of it in some of that is I just feel like that the arguments or the reasons given are probably not as strong as they could be. I feel like they could have been tackled a lot earlier.
Yes.
Just picking up on some of my knowledge on waste, which is quite a big area. One of the things that they're finding, obviously, it is the first quarter, so it's easier to track as you go through trends into different quarters. But certainly, garden waste is up, recycling rates are up, residual waste, the black bags are also up. So they're just working out how, obviously, that is different from the budget they're expecting. Yes, they did know about they would have known about the King's coronation, but there does seem to be a significant increase in residual waste along that weekend. Whether there was less recycling and more residual waste, we're not really sure, but that's something that Mike Cadell and the team are looking at the moment, as to work out why it is a lot higher than perhaps we expected on that. But going into the second quarter, it'll be easier to see if that trend is continuing, or is it just particularly for that quarter. So we will pick up more detail on that, and in quarter two report, hopefully we can explain that. Hopefully Waste can explain that a little bit better. From a safety defects perspective, they are, based on the previous winter, they are expecting to spend quite a considerable amount catching up on safety defects, and obviously invested in safety defects. So that's why the overspend is in there at the moment. Hopefully that will come down and be able to mitigate some of that costs, but they are predicting a considerable increase in fixing a lot of the potholes, for example.
Thank you, and I will ask if obviously further detail we can circulate as a written answer maybe to members of the committee for the detail of the questions, but that would be helpful. I've got Councillor Wilkins, and I'm going to count Councillor Shortcott.
Thank you, Chair. Again, a written answer is perfectly acceptable on this, and it's to do with on page 78. It says that the Department of Education is going to be building two specialist schools, one of which has been delayed from September 22 to September 24. It's basically about the budgetary implications of this. Has that been factored into those particular budgets, or is there an impact on obviously otherwise sending pupils probably outside county? What the implications, are they factored in currently? Are they factored into September 24 and so forth? But written answer I for now. Thank you.
Thank you very much.
I think Sean can deal with that because I know it's been raised in other places, the additional cost that's created for us.
Please go ahead then.
Yeah, so the current 23-24 forecast against the dedicated schools grant, because this is an impact on the dedicated schools grant high needs block, not on the local authority fund. There is a knock-on implication at some point in the future. But the 23-24 forecast assumes that because those places aren't available at the free school, that we are having to pay for those children's additional SEN provision in INMS placements, which are high-cost placements. And for the 24-25 forecast, when we start doing medium-term financial planning, we will assume that those children are probably likely to stay in those INMS placements, and the free school meal will only support new children coming into the system through their EHCPs.
Thank you very much. Councillor Shulcott.
Thank you very much, Chair. First of all, I have to say huge thanks to the team. I think the work that you are facing currently is probably unprecedented. I'm sure you'll be really pleased as more and more of the counts get closed down and tied up. But a huge thank you. I know you're in a state of transition, and just to say your work and effort is really appreciated, I'm sure, by everybody in the room. Just a couple of questions. Firstly, I very much welcome that it's going to be monthly reporting. I know that it's onerous for the staff, but I just think it's critical, and I certainly know that in years past it's been welcomed by auditors, I'm sure welcomed by councillors. So my first question is, we're at 28.6 million forecast overspend at the moment. This is month 3. Do we have any sort of sight on whether that's gone up month on month on month, because we're missing month 1 and 2, or whether it's sort of been a bit of an up and down journey? Have we got, first of all, a thought on that?
So I don't think we've ever done a month 1 actually, because we're normally into closing the accounts of the old council. We did do a high level emerging issues month 2 paper, which we just did internally to try and understand the risks. So I could see there were a number of risks and a number of things emerging out of the budget. That identified a range of numbers in there, so it wasn't a precise number as you're seeing in front of you today in terms of the budget monitoring report. That had a range in there of sort of 40 to 45 million. So this has come down from that. But I think what I would say is I think this is going to be quite bumpy. I think there's going to be a few ups and downs. You know, in the background, there's quite a lot of work to get budgets aligned into the right place, to make sure we got all the right financial information out to budget holders, etc. So this could go up as well as go down, I would say, going forward, Mandy.
Thank you. That's my question, really, because obviously if we did that by 4, we're at over 100 million in year, which absolutely would not be sustainable and would obviously wipe out all of our reserves. My next question is actually around the budget setting this year, and this is the sort of first view we've had. And when I looked actually back, and I'm looking at adults actually, because that's the, you know, the biggest figure and the biggest pressure on the page. When I look back at last year, as at Q3, which is our last quarter report, it was 11.9 million overspent, and we're now at 12.1, so slight similarity there. And I know when setting the budget for this year, and I did raise it through the executive and in scrutiny, you actually base the budget on last year's expected budget as opposed to the outturn budget. So my question again is, when you are budgeting forward the following year, do you need to be basing that budget and adding the pressures to it on the actual outturn figure as opposed to the actual budget that was set? That's my sort of first question.
Last year was a bit of a strange year of bringing 5 councils into one as a starting point, and to an extent we had to go with, certainly not adults, but in the other budgets, what was in the existing councils and bring that together and then adjust for it. Funny enough, one of the discussions we were having earlier was rebasing the adults budget for next year and actually going back to basics and driving it through rather than doing perhaps the incremental approach we adopted this year on that. So for different budgets, it will be going back to the basics and building them up from scratch, as it were. So that's what we're doing for adults next year.
Thank you. That'll be really helpful. And it's interesting looking back. So I think you allowed about 7.5% for inflation when I looked back at the budget figures, which it's not a million miles probably off where we are. My next question is just around Newton really, and you know, I understand they've re-profiled. I suppose the question is, would we have accepted that piece of work had we known that from day one? I suppose that's something we can't answer. But my understanding was when it was presented that some of that money was going to be paying for some staff to try and get the savings in as quickly as we could to help in the best way that we could. So are we actually paying out already without seeing the savings, i.e. actually is Newton being here and in the building this year going to be costing us more than we're saving, i.e. will it be a hit on the revenue budget?
Over to me. Newton are currently in the building, but nothing has been paid to them as of yet because the contract hasn't been signed. So they are acknowledging they're working currently at rest. That may not go ahead.
Thank you. I do hope that if they are not delivering, that we're not paying out, because it would just seem wrong within any contract to be paying out ahead of the promised delivery and savings. But there we are. I'll leave my questions there. But I think it's a challenge. I think we all are behind this. I think there are a lot of pressures and, for me, warning signs here. And the only thing I would add probably to Councillor Rodriguez is to say that there's a lot here to me that there aren't figures behind it. And I always like with a budget to have a figure and have an aim and know when it's going to be done over. And I think moving forwards, if we can start to have some figures and expectation, you can then scrutinise as to whether those expectations have been met or not. It's very difficult to do with no timings and no figures in a paper. So my plea would be coming forward, can we have some figures? Can we have some goals so that we can then sort of ask some pertinent questions about them? Thank you.
Okay, thank you very much. Councillor Lashon, do you want to say anything? Because I know you wanted to say something at the start, but were called away. So if you'd like to say anything, feel free. If not, I'm not going to put you on the spot. But
thank you, Chair. I was just going to say that considering we've had LGR and financial pressures and the move to dynamics all at the same time, I think the finance team have done really well to get this budget monitoring report to us in this level of detail. I realise it's not enough detail for everyone, and that will be built on, of course, as the months go on. There is a set of slides for adults. I'm not sure whether that's been to adult scrutiny yet, that I found very interesting and very revealing. And one of the things that I've been working on for my own exec and wider colleagues recently is where the kind of historical factors and the more recent year factors have actually played into where we are now. So where inflation has hit, and it's hit lots of people in lots of ways, we're not unique, are we, in the pain we feel from inflation. But because we started from a point where, so forgive me if I get the terminology wrong, but the price we were paying per bed was very low in Somerset. My layperson's view is that we've been hit particularly hard in Somerset by the reality of inflation, interest rates. So I think we've had quite a few benefits. We've had the benefits of low interest rates, the benefits of low bed rates. I think we've had the benefits of probably a low wage economy in Somerset to some degree. And I think they're all coming home to roost at the same time. And we've now got a picture as all the councils have come together. So all of those 5 councils' ambitions have come together and commitments have come together at the same time as nationally the financial picture is very difficult, and it is that difficult, and I'm under no delusions at all about how difficult our process will be to get to next February and budget setting. And so every month, every week actually that goes by, I learn more, I understand more, and that gives me a greater understanding of the difficulty, the level of difficulty that we have in Somerset. You know, what it would have been without LGR, I can't say. What it would, you know, if we just had LGR, I think we'd have been okay. If we just had inflation, that would have played out differently across the 5 different councils. So, but all of that is, it's because it has no relevance to where we are now. It's where we are now and how we cope with it now that matters. And we just have to accept that it's going to be really. I was going to mention the MTFP board, which is an officer and executive member board that met yesterday. It was a long meeting and it's demanding. And then we're working as well on a much more comprehensive risk statement. So not that it's more comprehensive than the risk management we're doing, but that it's a more comprehensive statement to put into the public domain. So it forms part of our budget setting process, and that is also something that we can refer to when we communicate with parish, town, city councils, because they need to have prior knowledge of where we are. So we talked to them last year in November. We need to talk to them earlier this year, because we saw enough pressure last year. And actually last year, I think I said it at full council, those mining the savings from LGR, which were one-off savings mostly, helped us set a budget last year, but we've mined those more deeply than we expected in the first year. We don't have them then for the second and third year, and we've probably got a bit of a hiatus now before we get savings brought forward by proper transformation. So we've taken one set of savings, we've got historical factors, we're now going to have a hiatus before we see the benefit from transformation. So it could be, can't promise it, but it could be that setting the budget next year will be the most difficult, but none of us know what external factors are coming our way. We have no idea. And it would be a fool who'd predict anything at the moment after what we've seen the last few years. Thank you, Chair.
Thank you very much. I think it's a very useful presentation. First of all, I thank the entire finance team for joining us today, and I think everyone would like to pass on their thanks to you for the work you're doing. As has been said by a number of members, you've got an interesting time at the moment, both with the bringing together of 5 authorities. We've got the current financial situation and the technical issues and IT bringing together as well. So it has been, I'm sure, an interesting time for all of you, and more to come. I think in terms of where we've been looking at today, I think the feeling, certainly I'm getting from members, is that members feel that they need to be very much kept in the loop as to how this is moving forward. Ideally, there's information in terms of sort of profiling savings as well as to where we're expecting them and how we're performing against that, I think will be useful to keep track of. I think in terms of members as a whole, there was the comment made about making sure that all members realise the impact that finance is having on the council and the rest that we want to achieve in this challenging position that we're in. I think from a technical point of view, I think the issue was raised, I think, by yourself, Jason, about the scheduling of scrutiny and the monthly reports that are going to come out because of the financial position being as challenging as it is. We need to look, I think, and if members of committee are happy, that we look at the scheduling of our scrutiny meetings and how they fit with the executive, so that we're not following on, that we are trying to feed in something useful, and how we address that. And again, looking for guidance from the committee. But if we are having monthly updates in terms of the budget, we've provisionally been looking at monthly meetings anyway, at an interim, and I wonder whether we should be looking at that as an ongoing position, so that we're in a position to look at those monthly updates and feed back into them as often as we can. I'll slightly leave that hanging with the committee, but I think it's something for us all to consider. And if so, we need to feed in with Democratic to make sure that actually works. But as we've heard, and again from cancellation, moving forward, it's going to be an extremely challenging next 12 months, and I think we need to make sure that everybody is on top of this. And as has been said by, I think, everyone around the table, we're all in this together. We all represent residents of Somerset, and it's in all of our interest to make sure we get the best solutions that can possibly come forward. So hopefully, if there's anything I haven't mentioned, but if we can feed that back obviously through to the exec, that would be great. As I say, thank you all very much for coming along. Feel free to stick with us if you want to for the next item, but if you need to get back, equally feel free. Our next update on local community networks. So if you'd like to come forward and maybe better on this side so it's away from those speakers. And if we can therefore come to Sarah to introduce this one for us, please.
Thank you, Chair, and good afternoon, everybody. My name is Sarah Skirton. I am the Service Director for Partnerships and Localities at Somerset Council, and as such, overall responsible for the local community networks. Members, I think all members will be aware that we launched the local community networks early in June, and tomorrow we have the final one of our inaugural meetings, which is at Burnham. We wanted members really to have early sight and feedback on how they were progressing, looking across a number of different aspects around, obviously very important, do people turn up? Absolutely they do. How has the governance worked? I think everyone knows a lot of work went into the terms of reference, so we've had the opportunity to test them in reality. And also, what are some of the themes that are coming up? And given the high levels of interest, what does that generate in terms of work that needs to happen between LCNs, and how can we absolutely make sure that we're doing everything we can to support their success within the organisation? I won't necessarily, Chair, go through every aspect of the report unless members want me to, but what we would like to do really is just ask members to note the contents of the report, and in particular if there are any areas they'd like to look at in more detail, because it's really, really important that we do review LCNs as they continue to develop. So obviously member input, scrutiny input into that will be incredibly valuable. Certainly we brought papers to the LGR scrutiny board when LCNs were being developed, and the feedback from those was incredibly useful in shaping how we got to the launch. I have Councillor Keach and Councillor Butt-Phillip, my lead member and associate lead member, with me. I'm sure they may wish to say a few words, but I'm happy to answer any questions anyone may have. Thank you.
Councillor Keach, to Butt-Phillip, would either of you like to comment to start with? Councillor Keach.
Thank you, Chair. It's been a long road. I have to say, from a personal point of view, I'm delighted to be going to Burnham tomorrow, because that is 18 of 18. I would reiterate what Sarah said. They have been incredibly well attended. The engagement from parish, town, city councils has been immense, and there are some emerging themes coming out of all of them. There are some where there's something coming in from left field, but it's particular to that geographical area. But generally speaking, they have, as I say, they've been well attended. There's been, when we go into the half-an-hour discussion bit, which most of the people have actually attended, there's quite a buzz in the room, and you know, there's sheets and sheets that we're having to go through of the emerging issues for people. I think things like affordable housing, speeding and use of rural roads, that's come up everywhere, which I'm not entirely surprised about. I want to give thanks to the staff, because we've had a lot of help from Democratic Services, from other members of staff, and as I say at the close of each meeting, to thank the staff, because there is a tremendous amount of work goes into making those meetings happen. They don't just happen. I mean, for me, they just appear in my calendar and I pitch up, hopefully not getting too lost. But I think we have 4 LCN chairs in the room, I think. Yeah, 2, yes, we have 4 in the room. And I can't stress the importance of LCNs, and you'd expect me to say that, but I think it's worth repeating. We've taken out a whole tier of local government, and it was the tier of local government that the majority of our residents, if they went to their parish council, they were sent on to their district council. That's gone. LCNs can fill that gap, but only if we are properly resourced and we are able to do and support those LCNs. It is the intention to have a meeting with all the chairs, either individually or as a group, to see how they think things have been going. But we are where we are. I'm delighted. I didn't think when we got to this point, I thought I'd be holding my head in my hands about some and thinking, oh my God, how on earth has that happened? But actually, there's so much positivity out there. We have to ensure that these are able to continue and provide the focus, because we're here for our residents. We're not here for me or any of you in this room. We're actually here for the residents of Somerset. And this is an ideal opportunity with a brand new council to actually make sure our residents' voices are properly heard. Anyway, I'll shut up at now.
Thank you, Councillor Keach. Councillor Buckler, did you want to add anything at that point, or?
Well, just to say, I don't have very much to say, but I'm a politician, so I'm going to say it anyway. But I don't have a huge amount to add, but I just want to say thank you very much to Val for the work that she's done on it. Val's thanks the staff, absolutely rightly so, but it's a project that she's taken through as her time as a lead member and is now continuing to lead on as an associate. So that's why she's sitting next to Sarah rather than me, because although it falls within my portfolio, Val is very much in the driving seat on this one. So thank you, Val.
Okay, thank you very much. I've got Councillor Wilkins and then Councillor Rodriguez. Councillor Wilkins.
Yeah, I'd just like to say, I mean, the amount of work that you've done the LCNs as a chair, I fully understand that it's incredible, and I really appreciate the help that we had as coming in as a chair. And I'd just like to echo Val's understanding that there is a lot of enthusiasm around LCNs. However, I do feel that there is a chance that will wane. And I'm in particular over the fact that, as far as I know, the positions, the officer positions within each LCNs have not quite been placed yet. And I understand that there's quite an issue around that, but my worry is very much that these are in place by the time of the next meeting, with enough time for the chairs to engage with them. Could you elaborate on that at all?
Thank you, Chair. The position where we are at the moment, obviously, ideally, we would have the full link officers at the moment. Members may recall when LCNs were given the green light by executive back on the 18th of January. It was recognised that there wasn't new spend available. There was the officer, which we were very how to mobilise LCNs. However, it was also acknowledged that there is community development activity, or there was happening across each of the predecessor councils, and that we would undertake a review to look at how we, for want of a better word, repurpose that resource. It's quite a complex review, but we have made progress, and subject to just finalising with our finance colleagues that we do have sufficient budget to move ahead, we're hoping to be able to recruit or go out to internal advert within the next couple of weeks I do slightly caveat that. So obviously, we just need to make sure that the figures are absolutely robust, but we'll confirm that. What we have done is made the job descriptions available internally for staff at Somerset Council. Certainly an awful lot of interest that I'm receiving from people. It may be, and I don't want to preempt any processes, but it may be that people can demonstrate a match between their substantive role and the new roles. Where that can happen, depending on where they're coming from, we may be able to move into position quickly. However, just to slightly manage expectations, any recruitment process will take, even if we don't have to go for longer recruitment, it will take a little while to get the team fully up and running. We've been working with my colleague Kate Hallard, who's our LCN development lead, to identify amongst our colleagues those who perhaps are more senior in terms of their experience in LCNs, to make sure that we've got one of those members of staff linked into each of the round 2 LCNs and ably supported by a team of people that have had roles such as locality officers, where they're used to working with communities and stakeholders. So I think what I'm saying is we will not have the full complement at the beginning of round 2, but we are making progress towards it.
I'll just come back on that. So you think that you'll have a senior person there ready for us? Will that be a permanent position, or do you think that that might change as the months go forward?
Thank you. It's likely to be from the interim team who have other substantive posts. Whether they end up applying for a role, I do not know at this point, but they are people that have a lot of experience working in this area, and they will be that with the chairs. It would be impossible for Kate to do it all, so they're working very closely with Kate to provide that support, and they will be part of the training and development of people as they are recruited as well.
Thank you very much. I've got Councillor Rodriguez and then Councillor Johnson. So Councillor Rodriguez.
Thank you, Chair. 2 questions. The first one is really around what Councillor Wilkins was talking about in regards to staffing. At the levels of moors, which Councillor Wilkins now chairs, the question was raised around staffing by one of those members present, and a concern in that not having link officers in place would essentially mean there's almost no point of having LCNs because we won't have the support network in place. And the question was raised, and I recall Councillor Balkeej saying that those link officers would be in place imminently because there were staff there ready to go. 2 months on almost from that particular levels and moors meeting, and we have a LCN report which talks about the growing reputational and operational risk associated to the delay in recruiting permanent staff. So I am concerned around that, and I just really want some reassurance as to what imminent perhaps means, because it may not mean what we thought when we left that room.
Yeah, I'm quite happy to answer that. When I made that statement, I did think it would be imminent. However, budget constraints, all sorts of other constraints means that it has been delayed. I make no apologies for that. I'm not happy with that position. I had hoped by now, and at least by the second round, we would have had the people in place. But as Sarah has explained, there are an awful lot of hoops to go through. Once we've got the budget position cleared and we have the go-ahead, then the job descriptions are ready, and we hope that the recruitment can start to take place end of August and September. I shall not let this go. I will be continuing to press because I understand that LCNs need to know. We have said they'll get half a link officer for each LCN, and we need to be able to deliver on that. Some of the successful candidates may well have notice periods on their existing roles, but my gut feeling is that there are people out there who can probably transition into those posts. So imminent meant something when I said it, and it probably means something different now. So I make some apologies for that, but that's actually out of my control.
Thank you, Councillor Rodriguez.
And the second one is out there to check if it's on your radar, Sarah. At the last executive meeting, there was a transport policy document that went there to them, and it was. And I asked the question at full council whether or not LCNs would be able to look at that document, considering the various transport and infrastructure concerns they raised, and have a meaningful say on the contents of that. Be reassured the full council meeting that would indeed be the case at the next LCN meeting. I just want to check if that has come to you and whether that's going to be in place for the second meeting of those LCNs.
Thank you. I will need to check with Kate. I don't know if she's online and wishes to comment, but we will make sure we've got that on our radar. Absolutely. Yes. Oh, here's Kate if she could come in.
Kate.
Hello. Yes, we have been talking to colleagues about transport policies and planning policies and how LCNs might be involved going forward in informing and influencing those on a local and Somerset-wide basis.
Thank you very much. Councillor Johnson.
Thank you, and thank you to the team. We had as chair of the Taunton LCN, we had a really positive meeting, and there's a great deal of energy and forward-looking ideas. As Councillor John Hunt said, and I hope you won't, I'll try and paraphrase, but basically he thought they were going to be talking shops, but he was really inspired by the enthusiasm and energy and excitement from the people in the room to really try and make some changes happen and influence things that are happening in our area. So, you know, I think with the right attitude, I think these can be very successful vehicles for supporting communities. I think, you know, yes, we need the funding in place, but personally, there was a lot of conversation at our LCN about accessing grants and available funds elsewhere. So I think a lot of the work of the LCNs, from my perspective, will be about having people skilled and knowledgeable in what other avenues are out there to ensure that more work can be done, given what we've just been hearing about the finances situations at the council. So I think, you know, we don't just look to the council to make this happen. We look to our engagement with lots of outside partnerships and bodies to make these ideas that are coming forward achievable. There was one question I had, and I haven't really understood this aspect of the LCNs, and it may yet be to develop, but it's how we will strategically influence the spend of the council. I'm not quite sure what the pathway on that is going to be. Maybe it's going to be the link officers, but I just wondered if you have any further insight on that. For me as a chairing the LCN to know. Thank you.
Who would like to answer that one?
Shall I?
Okay.
I certainly start. So when the LCNs have got to a point, and some will be further ahead than others, but they're probably in an exploratory phase at the moment. But when they have reached the point whereby there is agreement on priorities, the team will support the LCN to create action plans for each LCN, and they will be reported back into this council. My understanding, and I'll look to members to confirm, is that they will be considered by the executive, and no reason why not scrutiny as well, in terms of how they link back to our corporate priorities and also those of our partners as well. And those action plans will need to have smart targets within them as well. So it will bring in all the aspects you've mentioned around looking at other ways to resource priorities, looking at other partners that can be engaged as well, but also there will be that accountability to the council, and the intention absolutely is that the themes that emerge from LCNs will be taken into consideration as part of the strategic planning for this council. So, for example, future iterations of the council plan, you would be expecting to see reference to what has been emerging from the local community networks. I hope that helps. It's theory at the moment because we've got to work towards it, but that's the plan. Thank you.
Thank you. Councillor Ham.
First of all, I'd just like to say thank you to Val and Sarah for all the work they've done. It's not just been the last few weeks, it's been over 15, 16 months. And they've listened to most of what we've said, not all of it, but most of it. I think, to be honest, we do need to move forward at pace. And if we haven't got staff to do it, we need to get on and do it ourselves. After all, most of the people around an LCN are volunteers, parish councillors, people turn up, nobody's getting paid for being there. So I think, you know, it's up to us to make it work. Dawn said about spending the county's money. I expect Liz is probably wants the LCNs to save the county money, but there's a job to be done. So I think we need to get on with it.
Thank you very much. Any other comments or questions in the room? Yes, Councillor Trimnell.
It's only a very brief one. Obviously, I walked in and it was already underway, but I did hear you mention something about planning. Did you mean a different type of plan?
Just to absolutely clarify, it's more about a plan to support the priorities of the local community network. So like an action plan for each LCN.
That's brilliant.
I think the blood was draining from the faces of all the sitting chairmen of the LCNs if planning was coming in as well. If there's no further comments in the room, I think Councillor Cook-Woodman, you had your hand up at one point, but it seems to have gone down. Are you still wanting to comment? I'll take it. That's a no. Okay. In which case, thank you again, if I can, for your presentation on what's happening, and as others have said, all the work that's gone into getting us to where we are now. I think as those of us who've been around for a while are aware, most of the district had versions of working with the parishes and the communities, and hopefully this seems to have been helping to build on that. And I must admit, I've got the Burnham one to look forward to yet. I did go to the Cheddar one, and it was interesting. There was a great deal of enthusiasm there. I think, as others have said around the table, maintaining that enthusiasm is going to be key. And certainly I think the comments coming from today is we need to make sure the support is there in terms of officers, but also in terms of the finance, because it would be very easy for us to lose the momentum that has been got going, and that would be a real shame, because as again, those of us who were here in the last term, the whole point of these LCNs, as Councillor Keach has said, they were the link that was making a unitary work. That was very much part of the LGR plan. We need to make sure that those are an effective part of where we go forward. I know there have been one or two issues that have come up at one or two of the meetings relating to things like core membership and such, but I think we all understand this is an evolving process, and as time goes on, we will get to learn from the issues that have cropped up. But I think so far it's got off to I think everyone would feel a pretty good start. We just need to keep that, as I say, the momentum going, and keep the communities engaged, and bring more of those groups in, because I know certainly the meeting I was at, there was encouragement for extra groups to come and join. So hopefully that can take us forward. But as I say, thank you very much for the work so far. I would hope that Scrutiny, if we can give any support to you, Councillor Keach, in persuading colleagues to make sure that you do have the resources that you need to make these things work, I think we'll try and do our best to help you. But if there's no further comments on that at the moment, thank you very much. I think, members, that brings us to the end of our session today. It has been a long one, but I think we've covered some pretty deep topics that are going to be affecting us for quite a while yet. So thank you all very much for your contributions. We'll close the meeting and hope to see you next time. Thank you.
Chair.